Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Hey guys, good morning, welcome to the live session of Stock Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Recording in progress.
Welcome and good morning. Thank you guys for joining Stock Sniper Trading. My name is Ron. My partner is Dave. Thank you guys. It is 11:30 a.m. Eastern and today's date is Thursday, January 23. We started just 30 minutes a little later because right now Trump is speaking at the World Economic Forum in Davos. So I didn't want to just start the call right when he started, just in case you guys were trading, and I wanted you guys to pay attention to your trades just due to any type of volatility. Anytime this gentleman is speaking, make sure you guys are aware because he can literally speak or tweet or just open his mouth and the markets can move. He's very, very similar to like Jerome Powell. He has that type of ability to move the financial markets with whatever he says. So, and you got to understand that this guy is pretty unpredictable. He can say anything about anything at any time. So, if you remember years back in the markets when he was president, like everyone was waiting for him just to tweet and get into trades. So we'll see how it is in this term. But we could have an entire session just talking about Trump in the markets. Maybe we'll save that for a webinar in the future. Okay, guys. So how is everyone doing? Number one, how's everybody? Did we get some rest? Are we excited to be in the markets? Are we improving on our on anything related to trading? Are you guys getting better and better, understanding more so than just candlestick and trend lines that risk management is very important, controlling your emotions in trading, whether you are in a trade and you're profitable or you're in drawdown? It's how to navigate around those things. It's learning to be more mature in the markets, guys. I'm very, very proud of some of the snipers in the Discord. Yesterday, we had a sniper who took a 1% loss and normally would have revenge trade and caused chaos due to his history of trading, and he stepped away from the markets, realized he lost 1% and know it's part of the game, and had the maturity to walk away. He still preserved. He was up 5% for the week, and hopefully takes a day off, reviews his trading, reviews the markets, and can come back stronger. But just walking away, knowing that you preserved the 5% and you didn't jeopardize that. So that's step one, guys. And that's probably the hardest step in trading, is to learn that, is when to walk away, whether you're in profit, whether you're at a loss. It's very important. And some of you guys are really understanding this, and you guys will be successful if you guys can learn that principle, guys. And I stress the importance of it because it is truly the most important aspect about trading, is learning when to walk away, learning discipline, learning patience, allowing the trade to come to you naturally, to your zone that you've identified, to your just allowing the volume to come to you. If you feel like you're forcing a trade, then it just doesn't seem natural. Then maybe you should double ask yourself and say, why am I forcing this trade right now? Maybe it's not meant to be. And a lot of the time, if you go back and you look at your journal and you look at a lot of your losses, they're probably forced trades where they were taken where it was at unnecessary levels where you didn't need to take that trade. And when you journal and you look back, you're like, oh man, what was I even doing? Why did I even take that trade there? So always look back and reflect, guys. Always, every single day. Take some time out of your day from trading the markets and review. It will help you so much more, and your later self will thank you financially if you get on a regular basis and do this. Now, when you do this, that's on your own time. Everybody has busy schedules. I know it. I'm busy too. But you got to figure out a certain time and make it part of your routine. Early morning. later in the evening, when you come home from work after supper, or you come home from school, or you save it for the weekend, and then you set aside Saturday morning or a Sunday morning or a Sunday evening, something like that. But just fit it in your schedule because it's very, very important. Okay, so I don't want to talk about that all day. It's just these calls, they have no structure, so they go however they go. But I do have some structure in today's call. So we are going to do side-by-side analysis with QQQ. We talked about that briefly yesterday. It is the tech ETF. It basically is NASDAQ 100, and I will show you through price action how they are very, very, very similar. So if you love trading NASDAQ, NAS 100, if you love trading NQ in the futures, QQQ is very, very similar price action and charting in the stock markets. So we'll take a look at that. Okay, guys? Do you guys have any questions before we start from yesterday's session? If you joined us at the end of the call, I briefly reviewed interactive brokers. We can go over this again: Questrade, Wealthsimple, Robinhood, and Webull. These are platforms and brokers available for stock trading and options trading, and it's just you got to do your due diligence and pick which one works for you wherever you live around the world, and we can talk about that again. Okay. So if anyone's in any trades, please, please, please manage them accordingly. We still have Trump speaking here, and I'm going to start getting into this. Okay, guys? So let's have a good session. Let's have some fun. Let's see if we can learn something new today, and feel free to ask questions. I love when there's interaction in these calls, and it's not just me mumbling here. Okay, so good morning, Seng. Welcome. Lisa, thank you for joining. Dale, good morning. Letitia, welcome, welcome. Efren, thank you for joining me, big man. Thank you, Lisa. You're improving your research on individual stocks. Amazing. So that's what it takes. It's part of the research. You know, we're researching and analyzing. We're not just traders. We are researching the market. So you can also be called, you're a trader slash investor slash researcher slash, and we can keep going, okay? Because it takes a lot of research in order to pick these securities, and when they haven't already gone, so we're not buying the FOMO. We want to get in at good areas, value areas of support, areas of demand, allowing the trade, the volume naturally to come to us at a preferred area. Okay, so let's build off of that. And everyone on YouTube, thank you guys for joining as well. I appreciate you guys. Tony Gold, thank you for joining, my man. Meldon, Chachu, welcome, 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 guys. Okay, so let's get started. Let's just briefly go over Forex Factory. Hopefully this is part of your routine, and we're just looking. Thursday is a busy day in the markets compared to yesterday's news. We've got a lot of red. I can see that. This morning we had a lot of Canadian news, red folders. Core retail sales in Canada, negative 0.7% was the actual, below forecast. Retail sales below forecast. Unemployment claims in the US, we have our weekly unemployment claims. These are released every single Thursday morning unless there's a pending federal holiday or markets are closing early. But normally we get this every Thursday morning, 8:30 a.m. Eastern. It's like clockwork. This is our week over week unemployment claims. Not too much of a change here. So previous last week was 217,000 unemployed individuals applying for unemployment in the US. They forecasted just an increase of 4,000, not much. And then the actual number was 223. So did this really change the markets, affect the markets? No. The bigger unemployment claims are NFP, the first Friday of every single month. We're going to be getting one soon. I believe it's February 1st, if I might be the first Friday of the month, or I'm not sure. I know that my birthday is February 2nd and it's on the weekend, so I don't know if it's on Saturday or Sunday. And Continuing to go over here, we had natural gas. Okay, natural gas is a security we can trade. We can take a look at natural gas securities in the stock market. Beauty of the stock market. Pick whatever you want to trade, and let's do our research. So there's natural gas we can trade. Over here, Mr. Big Trump is speaking right now at the World Economic Forum. So you remember it was kind of conference, day 1, day 2, day 3, day 4, day 5 event. So they got Mr. Trump over there in Davos right now speaking in front of the world leaders, and who knows what he's saying. I got him on mute behind me, and he's probably just mumbling. And the markets can move very volatile with whatever he says. Okay, so I think Bitcoin is waiting for him to say something. That's why it dipped and then came back right back up before he's speaking. So it's kind of just consolidating, waiting him for just to say the word Bitcoin or crypto, and I think it will take off. But if he doesn't mention anything, then that's how the markets work. They're kind of silly, and then they might sell off. So he can say anything about anything. And we also have crude oil inventories coming in 20 minutes, 12 p.m. Eastern, USD, crude oil. So if you're an oil trader, did he already say it, Wayne? Yeah, that's probably why it pumped. So crude oil, guys, if you do trade crude, make sure you are aware that we do have a medium impact folder, and it directly affects supply and demand of oil. So that is a very important folder if you are trading crude, to be aware of it. We have then later this evening some flash manufacturing coming out of Australia, New Zealand, Japan, our Asian session over here. And then later tonight, tentative 3 back-to-back JPY folders. So this is our Bank of Japan. If you're trading the yen, be very, very careful during the Asian time, because when they release this, could be very extremely volatile. Okay, a great pair to trade if you're trading currency at this time is USD JPY. Good security to look at during the Asian Tokyo session, and with this volatile news, you could get some moves right now. Okay, so that's today. Tomorrow we'll review tomorrow when we get there tomorrow. Right now, let's continue moving. Earnings. Okay, so since we're focusing on the stock market, we need to focus on securities that report earnings, pre-market and after hours. Make this part of your daily routine. Okay, so just like you get up every morning, you brush your teeth, you wash your face, you do this, you do that, you put this part of your daily routine. Okay, you don't want to go one day without forgetting this, because you might make a critical error and you're trading a security and you forgot that Netflix has earnings and you're trying to short it, and all of a sudden it pumped to $1,000 from $860, and then you're left scratching your head. So make sure these are just very, very easy. We just click on it and just follow it. So this is my routine. I go from Forex Factory, I go to earnings. I look at, I'm on the correct date. No, I'm not. I'm on Wednesday. So we got to continue to move to the next day. We got to go Thursday, January 23, before the open. So these ones have already reported pre-market. American Airlines. Okay, so this is big. If you're into aviation and airplanes and all of this, these you are publicly traded companies. So in Canada, we got Air Canada, American Airlines, you got Spirit, you got Delta, you got all of these. You probably have flown on these, and now you can trade these companies. COVID was a perfect time. Think about it. What's going on around the world? When it was COVID, lockdowns, you couldn't travel. You couldn't go on vacation. Perfect opportunity to look for puts on aviation or cruise ships. Remember Royalty, Caribbean, all of those cruises, they were at a standstill during COVID. Nobody was even allowed if you wanted to go on vacation. So wouldn't it be a good opportunity to think logical and short these companies? Hell yeah. And if you did, you made some money. And then when the economy came back and things got back to normal, people started to go on vacation again. People started to go on cruise again, and then they kind of recovered and start. So you could look to buy that opportunity. So there's opportunities are endless in the markets. You just gotta, again, pay attention, be aware of your surroundings, what's going on. Like when there was COVID, alarm bells should be going off as to what securities will be making money and what securities would be losing money. I'm going to ask you, during COVID, what was one of the big corporations that made a shit ton of money? Who is it? Who's going to get it? This is a daily quiz. Which corporation, there's a lot of them, but the one I'm thinking of particular, which one made a shit ton of money during COVID? Health, saying, yeah, they did. Yeah, Pfizer and Moderna and Johnson and Johnson. Yeah, okay, but I'm thinking of the big name, top seven. Come on, guys! You guys were sitting at home. Peloton, yeah, that was a perfect pump. But you're sitting at home. You're on the internet. You want something delivered to your house. Come on, guys, think Amazon. Yes, Wayne, Amazon. Who wasn't ordering off of Amazon? Like we couldn't even go to Walmart. So Amazon made a shit ton of money. Record amount of money. So so you got to think when there's something like that happens, what securities are making money and what securities are losing money. So remember, there's always going to be a winner and there's going to be a loser. Okay, just like when we trade, we can make money or we lose money. So the opposite side happens in the financial markets too. It just we gotta do research. Lisa said it. Research. When COVID came, I was in lockdown. Me and Dave were just putting our heads together and we were just researching companies. When we had to wear those masks, remember masks, all that, we went in deep to figure out who develops these masks. We found out the company was AHPI. It was trading at pennies to the dollar, and this thing pumped during COVID to $42 a share. It was a Chinese corporation, AHPI. I don't even know if it exists to this day, but it's just doing that research. You got to do that legwork. A lot of people don't want to do that, but I enjoy doing that. Like, it's fun for me. I enjoy that. So we're going to be doing it together as a group. So that's why I need you guys to be more interactive. Figure out do your own research. If you got a security that's you think is a good time to look at it, definitely let me know about it and we can do it together as a team. Okay, that's the beauty of the stock markets. We work together as a team. We're kind of like a trading floor where we can work together as a team and we all look for good opportunities. But you guys are all correct. Everyone that said Peloton, yes, Peloton was a pump during COVID. GameStop, yes, Letitia, that one. AMC, Bed Bath and Beyond, Naked, all of these, I traded all of those. I have the tickets to show you guys. That was a fun time. Netflix, yes, absolutely. You're staying home. Netflix, Amazon, we got that. What else you guys got? Johnson & Johnson, yep, the health and all of that. Okay, let's continue because Ron can talk all day about the COVID times and okay, so here we got GE Aerospace, American Airlines, no big names. Elevance Health. So if you're in the health, if you're trading any health securities, pay attention to this. Making money, they exceeded profits, they exceeded their revenue, good growth, surprise. Everything looks good over here. Then we got some small regional banks over here. But let's see in the after hours if we're going to be continuing to trade this afternoon. We have Texas Instruments Incorporated, Intuitive Surgical over here. This is a company back in the day I was trading as well. This is they want, like, when you go for surgery, it's a human being doing your surgery. This is a robot that will do your surgery. So, that's, who knows, if the technology goes there in the future, you might be getting surgery from a bot and doing it, and it's not even a human anymore. Who knows what they're developing, but that is a company out there. And it's had its ups and downs and everything, but it's out there. Continue to move. No big names. Like a big name, like if Apple was reporting or Netflix or those big names. Those are those household names we look for. We don't have too much. And then tomorrow morning, Verizon, American Express. So those are your bigger names for tomorrow morning. Okay. Just continuing, guys. Over here, our news in the markets. What do we got going on? Okay. We got ETFs. We're learning about ETFs, electronic trading funds. So we're going to do QQQ, which is an ETF. So if you've never heard of the abbreviation ETF, you're going to hear a lot of it. It's a fund managed by your institutions. So QQQ is your tech ETF. So it's comprised of all of your top all of your tech corporations: Apple, Amazon, Nvidia, Google, Microsoft, Tesla. So if you don't feel like trading all of these individual companies and you don't want to make your own portfolio, you can trade or invest in an ETF, and then the managers, the institutions, will manage it for you. So if there's a name that's not performing in that index, and they will take it out, they will rebalance it, they reshift the names, and then they put another top performing name in. So if you remember just NASDAQ, I believe a month ago, they took out COVID name, Moderna, and Intel. So they weren't performing. So they removed them from NASDAQ 100 and they replaced them with Palantir, which we talked about yesterday, and Microstrategy, which I'm trading currently right now, and we've spoken about it. So you can see they're putting in more top performing securities. Kind of think of it as like sports, where you have your rankings. If you watch college football, you got your top 25 college teams, like if you guys watch the game, Ohio State and Notre Dame, big bowl games, like they got them ranked number 1, number 2, and the top 25. And then if you're not performing, you might lose a rank from number 2 and go down to number 5. And then once you cannot meet the 25 ranks in college football, you get kicked out of there, and a new team comes in. So it's very similar in the markets. You can, if you guys watch sports, it's very, very similar. So you can think of it as rankings, and then they get rebalanced every quarter. They come in and see what's performing. So you can do the same thing if you personally were diversifying your own portfolio. Like for example, if you're starting a position on Apple, like a long-term position, and then you start one with Tesla, you start one with Nvidia, and then you see that they're not performing, then you can get rid of that one and put it in with a new one and continue that process. But some people are busy, have busy lives, and they prefer institutions to do it. But you got to also understand that, just like mutual funds and things like that, there is a commission fee, and it is, to me, it's pretty high. It could be 1 to 2% that the managers take from your portfolio so I weigh those things. I'd rather do it myself and save that 1 to 2% than have someone else do it for me. So that's the part of financially educating yourself. Do you want to do this, or do you want someone else to do this for you? Okay, that's what it comes down to at the end of the day. And I prefer to do it for myself, and I'm sure you guys will feel I don't know what the word is. You feel proud, you feel gratified that you learned this and you can do it yourself, as opposed to just giving your money to someone else and let them do it. I don't know. I get more excited when I'm trading the markets myself. To me, it would be pretty boring. Just, what do you guys think? Just putting your money and let someone else trade it, and then you just sit there and then they take money from it. No, not for me. What else we got in the news here? Okay, so let's continue. Discord. Trade ideas. We're gonna start to do. Right now we're doing lifetime calls on Sunday mornings. Maybe on the Sundays where we're not doing the lifetime call, maybe a Sunday evening. We used to do this, guys, where we do like a weekly forecast, but I want to concentrate on the stock market, where Sundays maybe we get together and we can review the names and get ready for the upcoming week. Like we can do Tesla, we can do Amazon, we can do Palantir, we can do Johnson & Johnson, we can do all these names. Start maybe on the higher time frames. We won't be scalping, but we'll do a lot of swing positions, or just figuring out demand areas, supply areas, putting alerts, allowing the volume to come to us, and then we can trade it throughout the week. Okay, so you guys let me know how that sounds, if that's something that you guys want to do together as a team. I do it by myself, but if you guys want to do it together, I'm more than happy to do it with you guys. Normally I do it for 20 minutes, 30 minutes. I know with you guys it will turn into a 2, 3, 4 hour call, but if you guys want to do it and learn, I'm down to do it with you guys, okay? And over here, guys, free blog for you guys for everybody, not just YouTube, for everybody. Go over here to our website, stocksniperstrading.com, click on blog, and you get all of these blogs. Did you guys read this one? I've been reviewing this one all week with you guys. At the end of the week, maybe Friday, Saturday, Sunday, review this one, please, guys. Everyone, I'm trying not to waste everyone's time, but I'm telling you guys, this is very, very important. Are you guys getting better at developing a solid trading plan? Are you guys understanding your risk management. Remember that example I told you of that sniper in our group who took that 1% loss and normally would get rattled and revenge trade. He walked away. First time walking away from the markets, and it was very, very difficult for him to do, and he walked away. And he preserved 5% that he had compounded. So like, you got to understand your risk management, guys. Stay informed and educated. That's what we just talked about. Stay informed and educated about the stock market, securities, about what's going on around the world. Donald Trump is speaking. Stay informed with what he's saying and things like that. Always, guys, I preach this: practice with a simulated demo account. If it's your first time trading anything, forex, futures, stock market, options, practice first, then deposit your money. Okay, all of these things, guys, please go through this, please. I'm telling you, it's very, very important, and this could change you as a trader. Okay, Telegram, there's a free Telegram group, guys, for you, pinned at the top of the YouTube. It's right over here. We got a lot going on today. Okay, so I will also talk about this trade. I did a dollar cost average. So I spoke about this yesterday, DCA. So I started a position. I can go over the times and everything and show you my thought process. So I bought 100 shares of Microstrategy on the dip this morning at 10:15. Started a position, got filled at just under 374.50, and then sorry, this one should have been position 1 right here at 10:12. I got the times mixed up here, but it was 10:12. I started at 378, and then it dipped on me. So this was a positional trade. So then I added, I doubled my position at 374. So that gave me an average of about 376 with 200 shares. And then when it started to move up with that bullish volume breaking off of the support level, then I started to close right before the new 30-minute candle at 10:30, because I know that momentum switches at the new candles, and I was happy with that. So I got what I needed to do out of the day. I started selling to that resistance at 385, closing the position. It was good for 2%. Remember what I tell you guys: 0.5, 1%, 2%. If you can start to nail these percentages, it can literally change your life financially. So it's a game of capital. That's what I've been saying since day one. It's a game of capital. Some of you guys might have $100, $1,000, $10,000, $100,000, $1 million, but everyone is still going to earn 2% on whatever your capital is. For this trade, 2% turned out to be $1,750 in profit. So that's good for me, more than enough, and I can convert that into Canadian dollars and get a premium on that as well. This is the ticket here to show where I purchased the first 100, and that's what I put in, just under 38,000. I put another order in, just under 38,000, and then that's where I closed out the total, 77,000. So you take that, subtract that, and that's where you get that total of 1,750 net. So I'll talk about that on the charts in just a moment. Little quote here, guys: 20 minutes of trading a day can change your life financially. And it's right here. This trade I was in for 20 minutes. Yeah, I'm showing you this entire week, guys. If you've been with us on these calls, 15-20 minutes in Wall Street or outside of Wall Street, you can make your 1, 2, 3% gain and get out. That's why I love trading Wall Street. A lot of individuals tell me, Ron, why do you trade Wall Street? Why the volume is there, the volatility is there. It's exactly what I need as an intraday trader or scalper. Without volume, without volatility, I'm just staring at candles going nowhere. So I like the volatility, but I'm very patient and I'm disciplined, and I allow the volume to come to me into a supporting area. I don't necessarily always buy the highs. I wait for it to pull back, guys. That's what we've been practicing all week. Pullbacks, 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 as opposed to buying the highs. We don't want to do the FOMO trading. And over here, guys, the signals, the trade ideas in Forex. Here's long gold, 27.41, 150 pips. This is how you get your charts, guys, and we do the work for you. We kind of manage it for you guys. We help you guys, and we look for these opportunities for you guys. Okay, so let's get into this. Is Trump still talking, or is answering questions? So this is MicroStrategy. Real quick, guys, I want to just, okay, so I showed you those tickets. Now I just want to break it down for you guys. Maybe if you listen to what I'm saying, maybe you'll understand what happened here. Okay, so MicroStrategy, are you guys getting more familiar with this company? It's very, very volatile. It kind of mimics Bitcoin, kind of, because Michael Saylor's approach is to purchase bitcoins with the equity and the funds from MicroStrategy. Okay, but anyways, see how it was trading pre-market, dead volume over here, not real moves, consolidating, and then when do we get our first big base candle? Okay, I'm on the 5 minutes. Okay, you can see over here, MicroStrategy, MSTR is the ticker. I'm on 5 minutes and it trades on NASDAQ. Okay, it's part of your NASDAQ 100. It's part of your Qs. Is everyone okay if I break this down? Are we, can you guys hear me? Everything all good? What happened to Dave? Dave is here. Dave is here. He's healthy. He's happy. He's just taking a little bit of a break this week, and he does with the group. He does forex in the mornings, gold, and in the Zoom room, not on YouTube. Okay, but guys, this is a breakdown. Okay, so let's pay attention, because this might be a breakdown not just for MicroStrategy, but this might be a breakdown for any security you trade during Wall Street. Okay, so let's just set aside trading right now and let's just think what happened here, what transpired. Okay, so you see pre-market trading, it's very consolidated. To trade this, to me, it's garbage. Like, look at, are these candles moving anywhere? No. So there's a build up. You can see it leading up into, coming into Wall Street right there. It's trending up, right? Uptrend. So it's making higher lows, higher low, higher low. So it's trending up, but it could be a fake out as well. Sometimes what they do is they have a channel where it's coming up, and then Wall Street market opens, it gets you to buy, they fake you out with a buy, and then they hammer it down. Okay, that's happened. I've seen it before. I've traded it before. So you got to be very cautious, okay? Because sometimes the market, its job is to fake you out. Like, that's its job, is to fake out retail traders, to fake out any traders. So it's to gather volume. So the more volume they can gather, if they need to fake you out, or if there's pending orders down here or up here, they have the ability to come and grab those. But it was trending up from 820, okay, kind of COMEX market open. 830 we got our North American news and started to move up. 930, here's now Wall Street market open. There was initially open red and just a tiny wick to 371, and then just this full big body candle, unusually larger, correct, than all of these other ones. Would we not agree on that? Is that 9:30 a.m. 5-minute candle unusually larger than all of these other candles? Pretty easy, okay, pretty obvious. I'm not trying to trick you guys or anything like that. But okay, so when it closes, normally what I do is, on any candle, not just with MicroStrategy, whatever I'm trading, if I'm trading gold, crude oil, if I'm trading Dow Jones, if I'm trading MicroStrategy, if I'm trading Apple, if I'm trading Tesla, if I see an unusually large candle, 100% Sergio, I locate 50% of it. Sometimes when the markets are moving fast on the 1 minutes, I don't have time to use my fancy tools. I kind of eyeball it real quickly. If I'm eyeballing it, that's about 50% right there. Okay, I might not get it right down to the decimal, but that's approximately where 50% of that volume is. We don't need to do that where you're eyeballing it. Okay, that might just come with experience, where you're staring at these candles all day, every day. You might get good at that. But let's start as if today is our first day in the markets and we want to do this properly. Okay, we get our Fibonacci tool right here. You can go entire range. We've got snipers in the group that go from the low. They plot the Fibonacci from the low to the high. Okay, they're utilizing the wicks, the entire range. If you do that, all I say is keep it consistent. If you're going to continue to do that style on every other succeeding candle. Okay, because then you keep it clean and you keep it consistent. Okay, so you're not right, and if you're not wrong if you do it by doing the entire range. You're absolutely correct. It will just give you a different reading from if you measure from the volume alone. Okay, so what I do is I measure personally, and I'm saying this personally. I don't know why. It's just because I believe that the opening price and the closing price is more critical than the low and the high. Okay, I don't know how else to explain that. Someone asked me, Ron, why do you go from the open body to the close? Did you learn it from somebody? Did you? No, it was all self-taught, and I don't know, just by staring at candles, I find it's more specific and it's more critical volume. There's a reason why candles open at a price, and there's a specific reason why they close at a price. So when I know that, I want to know the exact golden zone fair value of that volume. Okay, does that make sense, guys? That's it. Someone asked me that question, and I don't know how else to explain it. That's all I got. So what I do is, again, if you do the wicks, you do the wicks. You do you. I do the open close. So I go from the opening price, Wall Street's opening price, $371.70. I bring my Fibonacci tool to the closing price. Okay, very visual. You can see exactly where it closed at 381.50. So that's basically a $10 candle, if we're just talking in dollars, from 371 to 381. $10, right? As a scalper, I'm just looking for a couple dollars, and then it all depends on how many shares you have. Okay, so if that's a $10 move and you bought 10 shares, you made $100. Okay, so it's $10 per share, and then it comes down to how many shares or units you have of the company. Okay, so what I do is, now I know exactly 0.5 of that opening 5-minute volume is at $376.62. Okay, there's the white line. So what I can do is place a line right there, keep it white. Okay, so I just overlapped it. Now what I have also, we learned, is we have one standard deviation above our 0.5, and we have one standard deviation below our 0.5. So with Fibonacci terms, ratios, it's our 618 and it's our 382. Those are household numbers. Get to know those numbers. They're very important. They are mathematical permutations. They're mathematical ratios. Math does not lie. Okay, so we can't dispute that 2 plus 2 is 4. It's 4. We can't say 2 plus 2 is 5. If you tell me 2 plus 2 is 5, I'm going to think you're crazy, or you got to give me a logical explanation why you think 2 plus 2 is 5. Because I know and you know 2 plus 2 is 4. Okay, so when we know that, then we can find the critical averages, the standard deviations, everything. So once we find 50%, what I do is I get my rectangle box over here, and I go one standard deviation above, one standard deviation below. So you see what I just did there? Now what do I have? Okay, I know I do this, but you guys tell me, what did I just figure out there? What does this mean? What is that? Anybody? I know it's a rectangle box. We got that. That's what my daughter's learning right now in grade 3. We're learning geometric shapes, 3D shapes. So how many edges does it have? Zone. Yeah. So we're learning grade 3. I'm learning it with my daughter right now. We're working on it. She got 6 out of 6 on her test. I'm super proud of her. So I'm gonna have to get her Pokemon plushie now. It's costing me. That's the trade-off. When she gets perfect in math, it costs me like $40-50 on these plushies, but it's worth it. So that's why I trade the markets. I trade the markets to afford all of these plushies, and it's a trade. We got to trade. We're making a trade. For her good grades in studying, I got to buy her her toys. Okay, so it gave us a zone. It gave us, Sergio, you're correct. It gave us a zone, 100%. Wayne, it gave us 50% of the bullish candle and one standard deviation. So it gave us, if we're waiting patiently for it to retrace exactly right at 50% at that white line, exactly at $376.62, It might miss us by 10 cents. It might miss us by 20 cents. It might just come in here and then get a wick and go back up. So what we're trying to do is incorporate for just a little bit above and a little bit below. So maybe if it comes down, it's coming to get filled in here. So what this represents is fair value in a trade. Fair value, okay? If it comes down, like for buyers, let's put our psychology of a buyer. When it's coming up here, it comes up here, it comes up here, it comes up here, it makes a high and it closes near the high. See, we're thinking, should I buy the high? FOMO, I was just speaking about that. If I keep buying the highs, maybe it will push down. Okay, so it's to avoid. Yes, in this situation, it continued to run. You could have, but in most situations, if you keep learning the strategy of buying the highs, you might get caught in drawdown because you're keep buying into resistance. At some point, there might be a large supplier there waiting to absorb you and have more capital than you and take you for a ride. So what most patient traders do is if they miss this candle, then they try to get back in at fair value. If it does come back down, because there might be a majority of traders that missed that volume and they feel comfortable getting in on a discount. Just like when we go shopping, we want a discount when we go shopping. Same thing in the markets. Why not look for a discount? Why buy at a premium price when maybe we can get a discount? Okay, so we're going to have to learn these words. These are common words in the stock markets: premium, discounts, a value. Okay, so value. So there's good value in here. So once we determine that, what I do is, so if you figure it out, stretch it into the future, because maybe at some other point in time it may come down to your zone. Okay, so what I do is, when I figure out my zone, and obviously the volume is the only thing that's variable, is moving up or it's moving down. If the volume is closing above this zone, what I do is I make the zone green. Okay, the reason I make it green is to represent money and to represent buyers and to represent support and to represent maybe demand in the future. Okay, all of those things. And then what I do is I stretch it into the future, because at some point in time it may come back to trade in this zone. Okay, I want to make it clear that it's not just 100% going to come in the zone and go right back up. Sometimes it does that. Sometimes it does. But sometimes it breaks and then it just continues going lower. But that's why we have to work with the zone that we figured out, and it's very simple, by flipping the color of the box and things like that. Okay, but what it is it's making us patient to wait for volume to come to us, and then when the volume comes there, we don't just act reckless and then we just forget all about our trading our rules. We have to then follow the volume. What happens in there? Is there a liquidity grab below? Is there a fake out? Is there a red candle that closes below? Then we have to flip this box red. And then this could be ongoing supply going forward, and the market is going to continue to drop. Okay, so this is just a first line of analysis. This is on just the first 5 minutes of Wall Street. Okay, does that make sense, guys? Like, I'm spending 30 minutes on this just to explain the first 5 minutes of Wall Street. It's very important. Not just Microstrategy is just the example I'm using because I traded this one this morning. I can look at Tesla. I can look at any. You guys can throw a security at me, and I can go and I can explain it. But this is one that I traded, so it's fresh in my mind, and I can break it down for you. So I wanted to buy today. I wanted to look for it, but I didn't want to buy these highs, because sometimes I know that I allow Wall Street 9:30, 9:45, 10 a.m. to settle down, and then I kind of trade after. So that's another approach that you can do. You don't need to just trade exactly right at 9:30 when the bell rings. You can wait till maybe 10. See, is it a continued move? Is it a pullback? Is it a fake out? Just gather as much research and information as you can while the market opens. Okay, so I waited. I was making breakfast when Wall Street market opened, but I was watching it on a tablet. I was watching what was going on. So I didn't stop there. I saw 9:45. 9:45 is a critical time in the markets because not all traders trade 5 minutes in Wall Street. Most traders trade 15-minute candles. So 9:45 is also a very critical time because now you have your first 15 minutes of Wall Street market open. So it gives you maybe a little bit more structure than just the 5-minute candle. So 9:45, we have a high right up here. Here's 9:45. It came up. We made a high of $390.25. There's our quarter increments. It's easier to transact at whole psychological numbers: 25, 50, 75, 100, 25, 50, 75, 100. We're at an auction. You know those guys that go blah, 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 sold and then they keep talking? This is a live auction. So efficiency of trading is held at these psychological numbers. Okay, so get familiar with this. Get familiar with this. So it's not just by chance. It right to that 25-cent penny. That's how the markets move, guys. Okay, so it got up there. That's our 9:45 high. What do we see there then? Next, it got rejected. Next, we have a red candle that came all the way down at 9:50. Did it engulf this green bar? Almost. And then the next bar opened red, pushed down, red, 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 came back up, closed like an inside spin top. Then we came back up. We came back up. Now we get 10 a.m. Remember what I always say. There's always a shift in momentum on 15 minutes, on 30 minutes, on 1 hour, and 4 hours. The higher the time frame, the more momentum that comes and more volume that comes into the market. Okay, so what do we see here? I see like a double top. Okay, I see it come up there, resistance, come back down, neckline, come back up. There's the double top, still getting rejected below 9:45 high, and then there's your big drop. Okay, that's your M pattern. We broke structure right there. There's your structure. There's your base of support right there, and you see how it broke. You guys follow me? Because I'm going to go now deeper. So if you guys don't understand this, you guys are not going to understand what Ron is talking about next. Okay, is this pretty simple? I'm just breaking down what happened here. I haven't taken a trade, nothing, just breaking down, observing what's going on. Okay, so now do we see where we can place a red box? Just from what we see from 9:45 going into 10 a.m. Even before 10, rate 10, it's right there, it's given. Above the double top, Sergio, look at what I'm looking at, guys, and tell me if this is exactly what you guys were looking for. We used the red line, 9:45 high, as our point of interest, point of control, all those fancy words. Use it there, and what I do is I bring it down to the bodies. The bodies, the bodies, the bodies. Okay? And I make it red, obviously, to show me that it came in there, green, 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 came back down. They gapped it up, they tried, they propped it up. It's kind of like a trampoline. They push it up to say, go, come on, push it. And when they did, it came up and it's lower high and they pushed it down red, hard. And then it came back up. Again, in the red, but closed right there. They tried one final time, 10:05, to push it through here. And it didn't. So you see how it, 1 time, 2 times, 3 times, 4 times, 4 big rejections. Is this clear, guys? Does this make sense? Because if this doesn't make sense, nothing is going to make sense. Almost, we're not looking at gold right now. Just pay attention to this, because you're going to see the same pattern on gold, and you'll be able to trade gold for the rest of your life. But just pay attention to what's going on here. Okay? Forget about gold for 15 minutes right now. Just focus on this. Okay? So what do I do now? Stretch it into the future. I could have had another opportunity to short the market right here. Okay, there's like the bigger double top. Okay, so that was just a little minor structural double top, but the bigger one is, if you look here, 9:30, this whole shit right here is considered to be one top. We came back down. There's kind of our baseline. We came back up. There's the official double top, M, and then here's your next leg down. Okay, is it starting to look a little bit
easier now. And I can trade this all day, like ping pong, like just coming up here, sell, coming back down there, buy, coming back up here, sell, coming back down here, buy. And I'm looking for small incremental moves. I'm not looking for the entire move. I'm looking for 0.5%, 1%, 2%, get my daily going, get out. But if I want to keep compounding and I got the rhythm and the volume is trading and it's respecting these areas, you can definitely really milk the markets if you guys want. That's up to you. That's how much time you want to spend in the markets. And believe me, I used to do this for 24 hours a day trading 1 minute candles. So I have some experience at this, but I'm trying to save you guys time but to capitalize you on money. Stretch this into the future. Now that you've established it, 1 time is resistance, 2 time is stronger resistance, maybe a 3rd time now, the market now, as it's developing now, the depth of market, maybe more and more and more offers are coming in the market at 390, strike price 390 or below, more offers are piling in. Because if it ever does come back up here, they probably want to sell this area again, unless the buyers, the opposing team, can really accumulate a lot more volume to potentially break it out of here, break out, close it above, and then we retest this and we flip the box to green, and then we're moving off of this. Okay, see how I establish my zones. I'm showing you guys how I establish zones right at 9:30, right off the hop. You can figure it out by 10 a.m. By 10:30, you should have your zones set up for the rest of the afternoon trading. Do you understand what I'm saying? You don't need to trade right away at 9:30. You can wait 9:30, 9:45, 10, 10:30. Relax, have a joint, have a coffee, have breakfast. The part of your job as a trader is to do your analysis and establish your zones. And then you can establish whether it's good trading volume, or you can establish if it's choppy, or you can establish yourself. Do I want to trade today? Maybe I take a day off. Is it nice volume? Is this volume I can continue trading and maybe get 3%, 4%, 5%, maybe turn it into a 10% day. Some of you guys are going to do it. If you got the rhythm, I'm not saying to stop. Just like in basketball, if you're shooting and you're on fire, the team will feed you the ball because you got the rhythm and you keep going. So same within the market. If you're feeling it and you're nailing it and your zones are A+ zones, stick with, but just trade with proper risk management. Don't get carried away. Don't get over leveraged. That's all I'm saying from Uncle Ronnie's perspective. But you guys, I know what you guys do. You guys, okay. So stretching it into the future. The price is not up here, but it might come up there. Okay. See how you can use even the Fibonacci. I got a Fibonacci, the one with 618, 387. I can bring my red zone right down to that Fibonacci, to the point of interest. I can use my white line now to add an alert right there if you want. You can add an alert. So I can go back and make breakfast, and then if the volume comes up to me, I get alerted, and then I know it's alerted in my supply zone. And then I just watch up there. Is it getting rejected? Is it do something like this, like a double top rejection? Or is the green volume coming through here and closing above? And maybe this is going to turn into support for the rest of the afternoon. Okay, so this is a little minor support zone, but still look at how it acts over here. Okay, so you see how I established just with a few candles. It takes 2, 3, 4 candles and boom, you got your structure. Very easy on the eyes. I see it right there, right there, right there. The volume stayed above. Yeah, there was an impulse break, but it came right back up and closed in the box. So this, stretch it into the future. Had you had done that, when this big red candle closed below, now you got a minor structural level. You got your scalp zone. Okay, so you see how it's red right there? And continue. So I see that this move at 1140 was kind of like a false break to come in the supply, and then boom, they hammered it down. And this is what drove this big leg coming down. Is this how the second came into where the bigger offers are? The big supplier is sitting in the red box. The supplier is not sitting in this box right here. They're in the bigger box. Okay, that was Wall Street's high. Why would they not be up there? So this is just minor zone. Okay, and you can, even with the minor zone, you can stretch the minor zone into the future. Now what it's telling me is the offers from the big box are being lowered right down here. So it's making lower highs. Does this all make sense, guys? Sometimes when I'm cooking, you gotta keep up with me.
But I don't be the shy person that's saying I don't understand what this guy's doing, because then this is just a waste of time. You got to understand what I'm doing here. Hopefully I do it in a good way that everybody understands and it's not too complicated. Okay, so we've established, Wayne, we got our top supply, we got a bottom one. Okay, what about our morning box? This one. This is the one where I started the entire call and then I stopped talking about it. But did we stretch this into the future? Hopefully we did, and look at how it's trading right now as I'm speaking. Red, green, red, closed above. Let's see now if it will respect our green box and start to move back up in here. Okay, so look at what I'm doing right now as I'm speaking. 1225 going into 1230. We're above, we're trading right above this green zone from Wall Street right there. But let's stretch it into the future and see if it continues to hold up. Now, okay, so while that's developing, and keep an eye on that, what I want to do is I want to talk about my trade. So it came down. I waited for 10, charted, seen what was going on. It came down, and my first trade, I was looking for buys at this Wall Street zone right in here. So anywhere from 375.50 to 377.80 under 378. Okay, so I have the actual tickets to show you, and this is not a demo account, guys, so I'm just making it clear. This is a real trading account. Okay, so I'm not doing this to show off. I'm not doing this to do anything like that. I'm just showing you my reasoning behind, because everyone says, Ron, can you explain the trade? So I'm explaining it to you. I'm explaining my thought process this morning. Okay, if you got questions, please ask. This was my plan for today. Was I was going to dollar cost average in because I saw that there was good volume in the market. So I wanted a bigger position, but I didn't want to just boom go in with the whole position all at once, just in case it gave me a dip buy. Okay, so I started, sorry, I put these out of order up here. So the first one, oh no, here is correct. Yeah, 10-12, here it was, sorry. They're out of order, but the timing will tell us everything. Okay, so today's date, January 23, 2025, 10-12, 26. That's when my order got executed. What type of order was it? It was, I was trading MSTR. Okay, this is a typical ticket that you will get when you're trading the stock market with whatever broker. It will have these things. Action and quantity. So I'm buying 100 shares of MSTR. Quantity got filled. I did an X market execution. Okay, I didn't have a limit order in there. I executed it because I was watching like the wicks of the candles and things like that. So my average fill, I thought I got good fill at 378, but the market wanted to dip a little further. Okay, so it got filled. Let's see, 10-12, 378. So it was over here. While it was coming down, 10.05. It went back up green, and then I saw it come back down, break the low. So it came into my green box. Then I saw it break. I thought maybe it was going to continue to sell down. Then it came and it closed right in the green box. So this candle, like 10-12, when it opened green, this is when I started to buy. As it was coming up in this green zone. So I thought I was getting a good value. You know, that's why I have it's a value zone. Unfortunately, it came back down 10.15, and then I see the next candle, they bump it up, ignited, and come into here. So to me, it looks like they came down there to grab some liquidity. I suffered a little bit of drawdown, but remember, there's liquidity down here, there's liquidity down here, there's liquidity up here. We'll see if they take it out today. There's liquidity up here, there's liquidity over this little red zone right here. Okay, so you understand that there's liquidity below these zones. Okay, it's right there, right there. It was right there. There's liquidity above here, 945 high. There's liquidity above here, 1115 high. And then there's liquidity like right above this minor offering zone. Okay, we understand that with the liquidity. So then when it came down, I wanted to add another position to dollar cost average in. So my thought process was to add another position to lower my average. So I added another one at 374. So my original one was 378, not the best fill. I should have maybe waited, maybe could have got in a little lower, but those woulda, shoulda, couldas, I was kind of targeting that green box, but I allowed backup. So I knew going into this trade, I was going to consider averaging in. So then I added another position of 100 shares at an average fill of 374, and it was filled at 1014. So now you take 378 and 374 divided by 2. My cost average now from my initial was 378. Now I lowered it to 376. And now I have 200 shares, units of Microstrategy. And it started to go, fill at 1014 over here. So you can see on this candle when it was kind of coming the bottom down here, 374. So you see I got kind of filled down in here. I took a shitty first one, but then I got filled in the liquidity. So that one right there, this red bar is where I got filled at 374. Then the next candle, they gapped it up, thankfully, and it came up, ignited, and closed above the zone. So now, remember, I have 200 shares. My cost average is right here, the white line, 376. So I'm right at that 50% level with my orders in and to anticipate this bullish move. So what was my target? Remember this zone that was green? I had red, red, red. So let's take a look at when I closed the position. So over here, and this is all I was looking for, okay? From one zone to the next zone. Not the woulda, shoulda, couldas, not this could have gone to the moon, not this, not that. Right over here, I sold the entire 200 units, average fill price 385, and at 10:29 and 46 seconds. The reason why I did that was because I knew we were going into a new 30-minute candle. It was already approached that resistance level. I was happy. I got 2%. I was only looking for maybe a 0.5%, 1% out of this trade. I netted 2%, which turned into $1,750 US. I'm done for the day. 20-minute trade. When did I initiate this? 10:12, 20 minutes, 10:30, done for the day. But let's take a look at exactly what I was selling into. So when it was coming up, I'm now in the money. I'm in the money. I'm in the money. Right there, 10:25. Here's my next candle. Right there. See how it kind of came right in there at that 385, 386. That's where I sold. Right into that resistance right there, guys. And thankfully, like I'm looking back at it, that I did, because then it would have came all the way basically back down to 379, and I would have pissed away a lot of profit. And what happens if it came all the way right there to my break even, and then I just like left 2% and $1,750 US behind? And you know, like I don't play. Yes, it could have, and then someone could have said, well, it came down, it made a higher low, then came all the way, and you could have sold at 390. Yeah, but those are those woulda, shoulda, couldas. What happens if I tell you it could have came down here and broke below this green box, and then all of a sudden it's dumping down here? Okay, so I don't play those games. I know a lot of traders, they play those games. I don't. I'm a zone-to-zone scalper. I've made that clear for the last 5 years. This is my style of trading. This is what I do. If it's not your cup of tea, we'll find you another cup of tea. But this is if you want to scalp the markets. If you want to scalp Forex, if you want to scalp futures, if you want to scalp crypto, if you want to scalp the stock market, if you want to scalp options, you gotta adhere to these rules. You gotta respect your zones. That's why you spend so much time identifying these zones. It's not just to spend an hour a day to find your zones and not utilize your zones. Like you gotta, like right now we have it closing above a zone. If we bought this, we're kind of in the money if it can continue to build some volume right here. But that was that trade. That's it. It's done. It's executed. I don't look back. If it continued to run, I don't care. What I would have done if I still wanted to trade, I would have waited for a pullback. I would have allowed it to go, and then maybe if I wanted to continue trading, I would have caught the pullback. You don't always have to continue to buy the highs, or that's it. I don't know what else to say. I was happy, hit my daily goal, done for the day, done trading. That's it. And then here's the closing ticket, like the receipt. When you purchase things, you get a receipt, an official receipt. So my first order of 100 again, 999 commission under 38,000. Second order added another 100, 38,000. Your net, then there's my sell of those two positions. So you add that up, you subtract your selling price, and then that's where you get that net profit of the difference of 1750. And this quote, 20 minutes of trading a day can change your life financially. And also, we do the same thing, establish zones in Forex with gold and things like that, okay? Does that make clear, guys? Did you guys understand that analysis? So now, if I wanted to continue to trade, okay, you see how it's now, how it came right back in the zone. It came down there. Did it close below there? No, it came right back in. Then we got barcoding, red, green, red, green. So you kind of got like a double bottom with 4 bars where it just came down. It came back up green. It came down, and then you got your big engulfing green bar, close above. Now we're consolidating. Are we going to get that bull flag and continue to come up here? So what I do now is, like, I want to make this visual for everyone. You see how we're the demand zone, we're kind of diverging away from it. It's making a higher low, a higher low. The more we can build off of this green zone and start to move back and close above these high wicks, we could definitely follow this arrow path up here. So what's going on right now in the market is we are consolidating above a area of demand right here. This neutral area is where we are currently consolidating. So sometimes it's got a high probability if we're creating a bullish flag to continue to break out to the upside. But it's not always 100% guaranteed. We need to get green volume closing above these highs. Otherwise, we're just going to constantly get some consolidation. We're going to have buyers buying and we're going to have sellers selling. We're going to have buyers buying, we're going to have sellers selling. Until someone really establishes the direction, we got to either wait. If it's the buyers, they got to close it above these wicks. If the sellers establish position and they're accumulating more down here, they need to sell it back down into the green box. But when it comes to the green box, you might have big pending orders waiting to get filled back in here. So for the seller to really take control, the seller has to cut through this green box, come below here where they did close it down there earlier at 10:15, but that big engulfing bar, that one I was a part of, came right back up. So we got to close back below here so that we can have time to make this green zone red. So if it's coming back up here, then it's actually an established supply zone, and then we follow this direction. That's for the sellers to win. Right now, currently, it looks like the buyers are accumulating more, but it's on light volume. Look at the candles; they're all indecision compared to our massive candles. Okay. Another thing that I do is, can anyone see another 5-minute abnormally large candle? We already did analysis on the green one. Do you guys see another candle that I'm eyeballing right now? The bear candle, Sergio? Yeah, this one. 10:05. This one. See how it's abnormally large? Just get your eyes to look for abnormally large candles, okay? And what I would do off of this, like, see how I can see where the bulls can possibly take it up here? What I'm looking at is this huge red candle at 10:05, that drop. What I do is now we do the opposite of what we just did with this green candle with Fibonacci. If I was eyeballing, okay, I look right there, that's about 50% of it. From the opening price to the closing price, this red line, just under 384, is approximately 50%. But let's not guess. Let's try and be precise, precision. Grab our Fibonacci tool, opening price of that big red candle, 10:05. Bring it down to the closing price. Okay, and then we have our 0.5 right here. You got your one notch above and your one notch below. So right there is that zone. I can make it red. Sorry, the chart is going to look sloppy right now because I got a lot going on. But if I bring that now into the future, what I can do is the minor zone above, I can get rid of it. And then I can really focus on the bigger one. So you see now what I just did? I took the belly of that candle, that big red one. We did the same with the green one. So why don't we do the same with this red one and stretch it into the future? Okay, so you see this arrow? like if we're buying and it fills from here, it breaks 379.50, we start breaking 380, 381, 382, 383, we trade right back into that resistance. If I was in a buy off of this and it came and filled right there, again, I'm doing the same shit. I'm either going to break even, I'm going to scale out. You can scale out. I could have scaled out of the trade. I could have sold 160 of the shares and left 40 running, whatever, 80%. Or just close the entire trade. But if it comes up there, it's filling, but we might be filling into a lower high area of supply from the day's high. Okay, does that make sense? So we can continue to watch what's going on. But you see that there's lack of volume. Like, look at the market is kind of dead now. So this is kind of dead zone. It's 12:38 p.m. Eastern. You know, I might just trade now choppy for a little bit until volume enters the market. So this is normally, if you see this type of volume, maybe it's not the best to be trading. It's more beneficial to be to not just trading, but to analyze the open markets. Okay, so does that help, guys? The way how I broke that down from pre-market, Wall Street, the first 5-minute candle, I broke down where we figured out the supply. I broke down the trade that I took. What else do you guys want me to do with this? Like, does that help? Is this beneficial to you guys, or anybody? Trevor, you love the fibs? Fibs are amazing. Fibs are, don't get me, I can get started with the math about fibs, but they are an exceptional tool. Okay, so let's get off MicroStrategy and let's do what we were supposed to do today. We are going to do a analyze QQQ next time beside NASDAQ. Okay, so I know we're going to shift focus off of this, but we'll come back and we'll see if this plays out up to here. But we'll keep an eye on this. Okay, let's now move to QQQ. Okay, so some of you guys have no idea what QQQ is, and it's amazing that we got you to now learn about this. So this is QQQ. See it here? Invesco QQQ Trust, right here. QQQ. They call it the Qs. Okay, I'm on the 5 minutes. We can get off of that. And we can go to the daily. Okay. So number one, anytime we start top-down analysis, start off on the higher time frames. Okay, it gives you a better perspective of what's going on. It kind of gives you a bird's eye view from the top going down. You can go from the highest point if you want. You can break it down from the monthly, bring it down to the weekly, bring it down to the daily, bring it down to your 4H, bring it down to your hourly, bring it down to your 30 minutes, your 15 minutes, your 5 minutes, your 1 minute, and you can bring it all the way down. And then you can just watch how the volume trades in between those critical zones on the higher time frames. And obviously, the higher the time frame, the more weight it holds. The daily support holds more weight than a 15-minute support level. Why? Because the daily support is a 24-hour candle, and it's probably been tested multiple times. And if it keeps holding up, that is creating not only support, but it's creating demand at that level on the daily. So then every time maybe lower time frame comes in there, 5 minutes, 15 minutes, probably trading in there, it's got a bullish engulfing candle bounce out of there. Or it's coming down red and it's got a wick getting rejected there. That's because the buyers are waiting there, getting filled their orders, okay? Until the real volume comes in and it starts to move it in the original direction where it needs to go. But with all analysis, please guys, get in the habit, get in the routine of always starting with the highest point that is beneficial to your trading. So if you're an investor, forget about the 5 minutes, forget about the 15 minutes. If you're an investor, you're looking to hold these names for multiple months or years, you need to be focusing on the monthly, weekly, and daily, and that's it. Forget about all other stuff. If you're more of an intraday trader, daily is good enough. Daily analysis, 4-hour, hourly, and then go down to your lower time frames. Okay, but what we can see, again, obvious levels. I know that this looks there's gaps in the market and there's all these holes and things like that. It doesn't look like a traditional easy flow volume just connecting. There's gaps. It could be due to pre-market after hours. Also, it could be due to whoever your supplier is on the platform is not showing like the after hours. But if you put it alongside NASDAQ will kind of fill in the imbalances and then you'll see it clearly. So when we do go to a side-by-side, I can show you right now. We can go side-by-side with NASDAQ over here. So you guys are very familiar with NASDAQ, NAS 100 NQ. This is majority of you guys are trading this. But do you see how very similar? I'm on the daily on both of them. Do they look very, very similar? Set aside all those holes and things like that. But I can see up there that bullish candle, December 16. There's the bullish candle, December 16. Come in there. NASDAQ push down. QQQ push down. Found a little bit of a support. See there? This is showing the wick. Got rejected back up. This is showing like a gap down. Bullish ignited candle coming back up. There's your 3-leg, 4-leg move. There it is. Below the red box. There's where we drop a little bit. This is how we drop. Again, you can see. And then how the volume is trading right here. That's where we're trading. Okay. So very, very, very similar. It's like a mirror. You're watching both of them. So if you're already comfortable trading NASDAQ 100, then there's no difference in trading QQQ. The only difference is now you're trading an ETF, you're trading the stock market. This might have to be either your own capital to trade. A lot of traders want to get to the point where they're trading their own capital as opposed to prop firm. What I said to everybody from day one is utilize a prop firm to build your account, but slowly start to take out of there and fund it into your live trading account, maybe in the stock market, because then there you are in full control and then you can preserve 100% of the profit at the end of the day. So utilize your prop firms, do it properly, and utilize it as a funnel to bring money into your live stock or options trading account, because there's not too many prop firms available for stock and options. So the unfortunate thing about this is when you're learning the stock market or options, it's your own capital that you're trading. So a lot of traders don't have the capital right now, so they prefer trading the prop firms, and I'm all good on that. Just pick a prop firm that are household name prop firms. They're not the scamming ones and things like that. We traded prop firms back in the past, and we kind of I kind of, when I got a big payout from my Forex funds, that's kind of when it ended. That's when we got videos to show you all that. And so I don't really trade prop firms anymore. I prefer trading my own money. With no rules, I can do what I want. Okay, guys, so let's continue with QQQ, then we'll come to NASDAQ. So do you guys understand what this is, QQQ? It's basically this, just in the stock market, okay? But this is an ETF funded ETF fund, electronic fund, and it's funded, it's by managers, institutions, rebalance this, reshift this, the names and things like that. So I'll have a full presentation explaining all of these things soon. But right now we're in the live market, so let's watch what's going on. So starting off with an analysis, okay? So we did this yesterday. We just figured out where our first eyes saw an area of supply right there. How can you not see that right there? See where it came up? That's it. And then it pivoted right down. Once you establish one structural area, it's good enough to stretch it into the future. Okay? It just takes that. It doesn't always take, it doesn't have to be 10 candles. It doesn't have to be 30 candles. Sometimes you can clearly see it right away. Right there, I clearly see that the market came up there and then it sold off hard. So establishing that from the top wick to the bottom of that body and that body, that gives me my zone. Now I stretch it into the future. You see how close we came to it yesterday? We traded, look at the high, just right under that red box. And then look at how they opened today. They opened today bearish, ignited. It opened red. There was no momentum to come and fill yesterday's high to even come into that red box. The market opened red and started just dropping where it made a low of the day and it's coming right back up. So we still have this hanging man candle with the red volume, the head still there. Will the buyers eventually flip today's red volume, come back at the high? Then they're trading right where it opened at the high. Then it could be forming into a hammer candle, and then the new volume that comes in has the momentum to maybe fill that wick and then trade right into our supply zone. But right now, the market is not allowing it to come in here. Okay, sorry, I'm on NASDAQ. I'll do the side by side, but we were starting with the Qs over here. So the Qs, very, very similar. I can see where it traded all the way up there, then it kind of pivoted down. So I did the same thing from the high of that wick to that body. That's where I figured out my zone. I can clean it up, tidy it up like right there. Okay, see the zone right there? I just took that structure right there, stretched it into the future. Keep going. Okay. Now I can see how it's trading into the zone. Okay, so since then, so anytime I figure out a red zone, what's the next thing we should be doing? Some traders will just continue figuring out red zones, and work their way down. If that's your approach, fantastic. But just keep it consistent is all I'm saying. Consistency, consistency, consistency. Because if you're consistent, you're going to be doing this with your eyes closed. You're going to be doing this half asleep and you'll know exactly what you're doing. Okay, believe me, I get 2-3 hours of sleep and I know exactly what I'm doing because I do it every single day, the same thing, over and over and over and over. But some of you guys might start off with figuring out resistance and work your way down and figure out your next resistance. If that's what you do, keep it consistent. Do the same thing when you're starting with your support. If you do it, you find your support, then find your next higher low support, but keep it consistent. What I do is I always find the opposites. I don't know why I do that, but anytime I look at a bullish candle, I always want to see the opposite candle. Is it the opposite? Anytime I find a support level, I want to find the opposite resistance level. Anytime I find an area of supply, I want to find the opposite demand. And it keeps me balanced. It keeps me always doing one thing, but always looking at the other, always keeping an open perspective that the markets can be bullish or bearish, but I want to get those critical zones. So that's good. We got one. Now, where's our next, no debate demand zone? Where I could place a green box on the QQQ. I see a few, but there's one that it's hard to argue. It's hard to argue with it. The one I'm looking at is where it came down this lower low leg, came back up, lower high. I know that the offers are coming lower. Then they pushed it back down. I see that it broke that low, created a new lower low. Then it came right back up. And then you see it's a lower high again, getting lower than there. So we're trending down. Then it's a new lower low right there, kind of capped it right there. That's it. It stopped right there, pivoted. I don't see any more red below this green day right here. January 13 to be exact. Do you guys agree with me that can we debate this? No, because this is the lowest point we've had starting the new year. Okay, so that created our first level of support for this. So what I do is, again, now the size of the box, the size of the zone. This is all personal perspective, okay? But I do the same shit I did on the supply. I do the same shit on the demand, okay? What did I just do there? It only takes 2 candles to figure out structure. Guys, it's that easy. I figured the low wick, and then I just brought it up to kind of the body. I know they're inconsistent bodies because there's gaps, but what we can do is we can look to the left of the chart, okay? So there's my zone. That's it. I established it with this green candle and that wick and that body. That's it. I can already stretch it into the future. But then also let's kind of back test. Let's optimize this zone. That's what a lot of traders fail to do, is once they establish a zone, that's it. They stretch in the future and they forget what's behind us. No, always look back. Look at the same zone. I'm bringing it back, rewinding it, bringing it back, rewinding it, bringing it back. Now I can see it came red, 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 red. November 21, bounced right out of that green box. Pulled back right in it. Started our long leg going all the way up to our red box. Okay, and then this is where we came all the way back down to the green box, and now we're coming all the way back up almost to the red box. So if it ever comes back down, we're coming back down to the green box. What is a green box? It's a whole psychological level. $500 on the dot. 500 and 505 strike price. Okay, give or take 5 points. But continue stretching it, bringing it back. You see how it started with kind of being resistance right here, and then closing volume above. There they came and they swept the box. They took out liquidity. Make sure you understand this principle too. This might help you guys, whether you're scalping, investing, whatever you're doing. Below a zone is liquidity. Below a zone is liquidity. They haven't tapped into it yet. Below a zone is liquidity. Above a zone is liquidity. Above a zone is liquidity. Okay? Do we get, just continue. Above a zone. Liquidity is everywhere. It's pending. But there's going to be more pending volume at above or below your zone. Now, what we need to figure out, this is the hardest part of trading, is to see if the market comes and sweeps the liquidity. Okay? So, if we get a leg coming down like this, right? Let's say we get next few weeks, we get the Qs selling off and it's starting this leg coming back down. We could potentially bounce right out of there. 100% we can, just like here, how it came down and bounced right out of there. We might get a double bottom where it comes back down and needs to pick up more pending orders, double the volume. Double is always better. They're doubling down. Sometimes when you play blackjack, you double down. You got like a winning hand, and the probabilities are in your favor, and you're like, I got to double down on this. I got this. So the market is kind of doubling down on this position. So that's why we get that W. Okay, doubling down, doubling the volume. Play blackjack. You guys understand the principles of double downs. Don't go to the casinos and gamble on blackjack, but there is individuals who count cards and understand the concepts and probabilities and mathematics of playing blackjack. And that's the double down approach, the double down strategy. We can double down in the markets as well, as long as we're waiting patiently in our identified zones. Okay, are we clear? That could be a setup. It could come down and bounce out of there, just like this. Came down, bounce out. It might come in there and then form a resistance, come up to a level. See how I don't have the level here? I can look to the left of the chart and find exactly where the resistance is. So I can determine where the neckline is before it even comes up there. And then maybe it's a neckline, it's a resistance, comes back down, double down, and then we're off. Okay, that's a possibility. But when it comes down here, I will determine what is going on. I can't say for now, but when it comes down there, we figure it out. The other, just understand this concept right now. I just showed you. There's liquidity here, liquidity here. There might be liquidity there. There might be liquidity there. Okay, pending orders, waiting to get triggered. If the market needs this volume, they will come down and get this. Okay, it's just a matter of what they want to do. So we also have to have the open mind that if it's coming down here, maybe it doesn't just do this. It doesn't just bounce one time or double down. Maybe the sellers push it and break it through here and get that dollar bills, get that money, and then they come right back up. And then we're taking off. Okay, so that's the false breakout. They come down, they get the liquidity, they get what they need, they get their fills. Remember, institutions want to, like how I wanted to get filled at a good level, there's institutions that want to get filled at specific levels. And they're trading not 100 shares, they're trading millions of shares. So they want the best available fill at that moment in time, and they know that there's a lot of volume liquidity down there, so why not come down there and get it? And then we move this direction. Okay, so this is with anything you guys are trading, anything. But also keep in mind, when it closes down there, it's coming back up. We're coming back up into resistance, so that volume has to cut through this zone again and close and prove to us it closes above. Then we can confirm that they came below here, grabbed that liquidity and closed above. However, while it's closing below there, I have my own strategy. What I do when it closes below there, this zone I flip to red, because currently when it closes below there, the depth of market, this might be a big supplier might come in and put some orders in here and make this a supply zone. Then on this bounce where they grab the liquidity and coming back up, This could be like a red wall, and it's absorbing all those buyers, and then the market continues to fall, and then we're coming back to other sources. So that's the only thing. That's what you need to be patient and disciplined and figure out when you're trading. If you're a scalper, we figure this out on the 1, 2, 5 minute candles. If you're an intraday trader, you figure this out on the 15, 30, 1 hour. If you're a swing trader, you figure this out on the 4-hour daily. If you're an investor, you figure this out on the weekly, monthly. Okay, there's a little bit for everybody, but you got to understand what is happening down there. Okay, so this is clearly a green zone. Let me just put it back. Okay. Do you guys have any questions about anything right now? Okay. So what we can continue to do is maybe find another zone. We can continue to all of this trading in between here. There is some zones. Try and find the most data points, the most touches that you can. You're not always going to be 100% perfect, but what I see is like kind of this little gap in here, and then I see like over here was resistance, here was resistance, maybe here was resistance. So I can see if I'm looking at one other zone in the market, like right now. What about this one, where it kind of came right in here, and this should right into that zone, and it came back down red, and then came back up, closed above it. See how we traded in it? Then we had this leg up. We closed below it. We came back up, traded like right at that zone. They did close it above with good volume, but look at the days. It kind of was a Thursday and then a Friday drop, and then continued push down. We came back up again, trade in there. They rejected it. Back down we went. We came right in there again, and then you see where they closed it, and then they kind of gap it up over there. So we are kind of trading above this zone right now. So this is where this is more active now. Okay, so now I can see exactly we are consolidating right here. Again, it takes 2 bars to determine a structure, and that's it. I've determined it. Maybe we're going to continue to consolidate in here for the next little bit. So what is the next move possible for the Qs? Is it could be forming like a bullish flag, and we continue to take out the high up here. So these are our options right now. It's coming down, might come back up, might come down, might go up, might come down. Could continue to trade inside here. Okay, that's a possibility. We could also have a buyers accumulating, and then we break it. We test the red box. We haven't come in here yet. Okay, so maybe we come in here, we see what happens. Maybe they have enough volume to technically break it out of here. And then maybe we pull back, we make the red to green, maybe we're pulling back here, pick up new pending orders, and then we're making our new higher high, higher low, higher high move. But in fact, if this doesn't hold up and we got more sellers pressuring the move down, we might break and do what I did earlier, come up, we make this green box red, and then we start dropping maybe down into here. However, remember, there's now the liquidity is kind of right above these zones. We got liquidity sitting up here. We got liquidity sitting below here. Okay, so what happens if they want to come down, trigger this liquidity, and do this, get rejected and come down? That's a possibility. But what happens if they fake out the market too? They come down, grab the liquidity, and then we're coming back up. We close above here, retest this. Then it gives us that leg. Then we know that they came down. They took out all the pending orders. They got the volume. They came up. They confirmed it, closing above there, retesting. That looks like a good opportunity maybe to go long on the Qs and break through here, and then we're driving. Okay, so it's just taking time to establish your zones and then continue going down the time frames. Okay, so right now it's consolidating. If I want to find out like points of interest points without putting too many zones, then you can utilize a line if you want to, like this style as well. Okay, so you can see where it came right up to there and it kind of stopped there, and then they pushed it back down. Okay, so this white line can be used as a point of reference. Anytime I'm on the daily, if it's not the high wick or low wick, I utilize a yellow line. The yellow line determines to me when I'm trading that it is a daily point of interest. It was over here, it was resistance on these 5 trading days. Here, kind of closed above it and started that move above. See the spin top candle? Like the entire day's trading closed right there. It opened on this day. It came all the way up bullish, made the high, came all the way back down to where it opened. Then the sellers pushed it all the way down where it made the low, and then the buyers brought it right back up and they closed it exactly right at that yellow line. Okay, so that was for a specific reason, you know, like, and then you can see how, again, like, look at this pin bar. It opened, it was, it opened right here. It was initially red, came back up, and then it kind of closed right at that yellow line. Okay, so that is a specific area of interest. Do I need to draw a zone there? I can if I want, but, and then since the volume is trading above, it would be like a green zone. What determines my zone is maybe I look at that candle body and then I can capture that and then bring it across and then I give myself a zone. Or you can grab your Fibonacci tool. See how, look at that yellow line. Does it not look like it's right in the middle of the top of this green box, 505, and in the bottom of this box, 525? So 505 and 525, what's the middle? 5 plus 25 is 30, divided by 2 is 15. So shouldn't the 50% be exactly 515? Simple grade 3 mathematics, guys. Teach our kids, teach our kids. Grab our Fibonacci tool if math is not our strong subject. I can go from the top to the bottom or the bottom to the top, whatever you want. But I'm justifying a zone, okay? So follow with me. Pay attention to this, because I know you guys after the call, you guys are messaging me and saying, Ron, can you go over what you just did there? And I'm saying, guys, please pay attention to this. It'll save you a lot of time and you can figure out the exact zones. So I'm placing my fib right there. Look at it. Was I almost dead on by looking at candlestick structure, utilizing psychological numbers, utilizing mathematics? That's how the stock markets work, my friends. Okay, look at right there. The yellow line, I can put it now right there. $515 and 2 pennies off of 25 cents. Very, very close. Walmart is making 2 extra pennies here. They're not charging us the quarter. Now, can we establish a zone? If we don't just want that line, that point of interest, let's make a zone. Let's give us something to work with. 1 notch above, 1 notch below, zone. Stretch it into the future. The volume is trading up here, so this cannot be a red zone. It has to be a green zone. That's it. Charting made easy. We got that? So, this is acting support right now. Might be active this afternoon, maybe tomorrow. And then, if it can't hold, we'll see if 515, this block holds. Maybe we get a higher low building out of here. If this doesn't hold, then we're coming into our lowest point zone. Okay? And with these zones, now that it's all done for us, stretch it into the future. I'm saving you guys an entire year's worth of analysis. Stretch this into the future. I'm going into June. Let's go into June. You can go into 2030 if you like. Okay? Are we good? I'm taking it nice, slow, and easy. If there's any questions, say, Ron, stop and explain again. I don't get it. It was kind of confusing, or it was over my head. Or if we understand these concepts, guys, I can really, really get into this. But I need to know that you need to know how to do this. Because sometimes when I'm doing analysis, I can do a top down in 2 minutes. And I don't want to do it where you guys don't understand what I'm doing. I want to do it boom, 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 boom. Because when we get into the stock market and we're analyzing securities, I want to go to NVIDIA. I want to go to Amazon. I want to go to Google. I want to go to Apple. And I don't want to spend 2 hours talking. I just want to cook. And I need you guys to understand that you guys know what I'm doing. When I know that, then we can keep moving. And I want you guys to understand that you can do this too. with minimal effort. Doesn't take too much effort. Okay, spend 10-15 minutes while you're drinking your coffee to get your zones. Okay, now if I'm a swing trader, okay, I'm not. Well, I can be if I want, but if it comes down there next few days, guess what? Why don't we place an alert right in the middle, 515? Add alert, hell yes, create it, absolutely. There it is. I don't have to do anything now. If the volume comes down here, I'm going to get notified. My computer is going to start singing. My phone is going to start dancing. I'm going to start getting emails. I'm going to start getting phone calls. It's going to start saying, Ron, you got to look at your zone. The red volume came exactly where you said it would come to. What's your move? So then I got to look. I got to go through those options. Is it coming in here? Is it bouncing off? Is it closing above? Is it doubling down with a W? Is it closing red below? Am I flipping the zone red? Am I shorting it? All of these things. But I cannot determine until the volume gets down here. Then we got to figure out what happens. So if you want to stay on the high time frames, stay on the high time frames. If that's your cup of tea, stay there. Find your swing positions. These are your premium. These are your discount areas. Right now the Qs are trading at 530. We can buy it at discount at 515. We can buy it even cheaper at 500. Okay, so if you're doing dollar cost averaging in, let's say I had $100. Okay, I have $100 in my pocket, and I'm putting this entire $100 trading this security. Okay, so if I know that I have $100 set aside for this security, and it comes right down into this box, do I want to go all in with that $100? Because if it comes down, then that's it. I'm in drawdown, and I have no other. I have no other way to save myself. That's it. So you got to keep some dry powder behind. You got to keep, like, when you get cut, you put a Band-Aid on. So it's kind of putting a Band-Aid on a cut. And then when you come in at the next level, it's kind of you're stitching up the cut. You know, it's not a Band-Aid, now it's a stitch. So you're really, really, really securing, you're stopping the bleeding when you're injured. So the same thing here, same approach. If it comes down here, maybe with that $100, I want to start, how many dollar cost average do I want to do? Maybe I want to put in $20. Okay, so I'm putting in 0.2%, 20% of my entire $100 that I've allocated to this. I'm just using hypothetical numbers. Okay, it can be $1,000, it can be $1 million, but I'm saying maybe I'm going to put in 20% to give me some wiggle room in case it comes down. So if I put in 20%, I buy it here at $20. What happens if it comes back down? Like it bounces, I'm in a little bit of profit, then all of a sudden it comes deep and breaks, and then comes down here. But my dollar cost average approach is on my mind. And then now it's coming down here. I'm in drawdown, but I got in on only $20. I still have $80 behind to lower my average. So when it comes in here, maybe I want to add another $20, double up my shares. So then I add another. So now I have total of 40 shares with an average of, if I bought in at 515, my first order, and then I bought in right in the middle of this box, let's say, let's just keep it easy math, $500. Okay, so if I buy at 515 20 shares, and then I buy at 500 20 shares, what is my dollar cost average now? 515, 500, 15 divided by 2. Real easy, guys. 7.5, right? So I'm in at 507. That's now my cost average right there. That's where I am. So if I initially bought there and then I added more, I'm still in drawdown. My average is right there. But maybe we're coming in the bigger demand zone, very similar to my trade this morning. And then it comes out of there. And then now it's moving back up to this zone. Now we're in profit. Now we're up. Here's where our cost average is. Now we're in the green, coming right back up here. What happens if it's kind of trading inside here? Okay, I still have $60 more for this trade. What happens if it comes back up? Now look at, now 507 is my resistance. Oh, you know when the markets tease you like that, it comes back, puts you at break even, and then it goes back down. And yeah, the markets play psychological games with you, but then you see double down. It's coming back up, maybe like there. and then closing above and then retesting your 507, that's your initial cost average. Maybe if it's doing that, that's when you double down and you say, I want to now grab 40 shares at 507, double down my position. So now I have a total of 80 shares. I still got 20 bucks left over, but I'm now in a healthy position where I've kind of been building and accumulating with the move. But now I've got a lot of shares, so if there's upside momentum, I'm now in the money. Okay, but it took a while to kind of navigate around here. So the markets are not always just going to come to you and go right into profit. You might have to like massage a move. You know what I mean? You got to work with the move. You got to know how much you're putting aside. I knew how much I was putting aside for today's Microstrategy trade. That's why dollar cost average in. If it dropped even further, I would have gone in again. Probably would have doubled down. I probably would have grabbed another 200 shares and brought my average down on anticipation that it was going to move out of those demand. But that's what you got to figure out, guys. It's the preparation of the trade. It's not the figuring out the zones. We got that down. It's the preparation. How much are you willing to put in this trade? What is your plan? Are you just going to go all in with your money? If you're this guy that goes all in with the 100, then you're screwed in drawdown, and you never allow yourself to recover because you have no other means of buying more shares or dollar cost averaging. This doesn't really work with Forex and shit like that. This is good to do with big name securities in the stock market, that they respect zones, that they're liquid, that there's a lot of volume, that allows for new money to come in. And so it works well in the stock market, this approach, dollar cost averaging in. And then, for example, if it comes down there, now you got 80 shares and then it's making its way back up. Now you're 80 times more in the money because you got 80 shares instead of your initial 20. Okay, does that make sense, guys? Sorry for that long explanation, and we will do this when we get to live trading. If I tell you guys I'm opening up multiple positions, I will let you guys know. I'm going to start a position there. If in fact it comes lower, I'll tell you guys I'm doubling up or I'm going in. That's just me personally how I trade. I don't want you guys to mimic how I'm trading. I'm just telling you exactly what's going on. You know, like, I'm not gonna lie to you guys. If I add another position, I'll tell you guys. Don't worry, guys. I'm not shy. I'm not this, that, but I'm just not a financial advisor. So we got to understand those concepts, those rules. I'm not a financial advisor. Okay, that's where you got to go to your financial institution and get advice from those guys. Here, I'm just showing, having fun, entertainment, education. Okay. So where did we leave off? We got some alerts, we got some zones, higher time frame. Now we don't want to spend all day on the daily. We want to have some fun. So let's now take it down. Let's go down. We can go daily, we can go 4 hour, we can go 2 hour, we can go 1H, we can go 90 minutes, we can go 45 minutes. Did you guys know that? If you guys don't want to do these traditional time frames, you can make your own time frame. If I want to do 90 minutes, put in 90 minutes here. And look at this. I got 90-minute candles. Okay. So if you're doing like a 90-minute session, an hour and a half a day, focus on the 90-minute candles. Remember, all candlesticks all have the same characteristics. It doesn't matter. These are your 90 minutes. It's a hybrid. It's in between your hour and your 2 hour. Your hour and your 3 hour. You get a hybrid. You can do hybrid if you like. Some traders like 45-minute candles. They don't like looking at the 30 and the 1 hour. They like the 45. If that's what you like, God bless. Do what you got to do. You know, if you like the 7.5 minute, is there even a 7.5? Can we do that? Let's see. Not applicable. No, they got to be whole numbers, I guess. 7 minutes we can do. If you want 7 minutes. I don't know. You pick whatever you want, right? But for this purpose, we're going to go 1 hour. Okay. So it's trading pretty clean, actually. Look at it. See, now we've got, what was this big red zone? If you want to really be precise on, you can write in here, you know, like when we're getting fancy, you can write in here that this is a daily supply. You can put, like, you can write down here exactly. So then your chart is like a grid and tells you exactly. I just know color code and the size of my zones, what it is, what it represents, because I watch these things every single day. But here's our hourly. We have now, okay, hourly structure within daily structure. This is amazing. Look at, does anyone see a zone right now on the hourly? Please, someone tell me right now. Like, my mouth is watering right now, looking at where I can draw a zone within a zone. I'm going to wait. I'm not going to go until someone tells me. I'll wait here all day. I'll wait here all day. 533, Sergio? 533. Oh, okay, you're looking up here. I'm looking more concentrated near the middle. Okay? Right over here. Tell me if you guys see anything here. Like, I'll just draw a line, then I'll show you guys like what I'm looking at. I'm looking at right here. Did anyone have their eyes on this specific area? I'll draw a white line for hourly. Anybody? One new campaign. We're not doing gold right now. I apologize. We're not doing gold right now. Okay. We're trying to teach. Like, I can't even look at the comments anymore. Then I just gotta continue doing what I'm doing, because this is where I see that no one is focusing on what we're doing here. And then it's just like, am I wasting my time here? Am I just, like, literally I'm wasting time. I could be trading the markets on my own time and making thousands of dollars. I don't want to be that kind of guy but if you don't want to be here, then just go to another channel. This is, if you really want to learn what we do here, then you got to pay attention. That's where I know that no one is paying attention, because it's all just go to gold, go to gold, go to gold. I don't give a shit about gold right now. I'm telling you the honest truth. I don't care about gold. If I wanted to do gold, the start of the call would have been gold trading, XAU USD. It says stock market analysis. That's what this channel is. If you want gold, we do it at a different time. We do it at COMEX market in the morning. Okay, sorry guys about that, but this is what I'm looking at. Okay, this could be gold on the hourly. Okay, this could be gold. And if you don't know how to identify this, then what is looking at gold going to do? Look at this, guys. This is an abnormally large volume-based candle on the hourly. Did we not do this on the 5 minutes of Wall Street when we started this morning? Okay, you see how candlesticks have all the same type of characteristics. It doesn't matter the time. It doesn't matter the time frame. It doesn't matter. Look at this. I can see that this is an abnormally large green candle. Let's verify the time. The time was 9 a.m. Eastern yesterday, right? Wednesday was yesterday, if I got my days correct. I just eyeballed 50% of it. And Ron's eyes are pretty red right now. It's not red because I'm high. It's red because I'm lack of sleep. But it's right there. That's 50%. Look at now how the structure, how it closed below. And look at the volume right there, the ignited bar, drop 4 a.m. Eastern this morning. So that's 1 hour after London market. We slowly are making our way right back up. When did we hit it? 11 a.m. Tapped into there and go back down. Now we're trading again right at it in 39 minutes to go. Are we going to close with green volume and continue to push up? Or is this going to be kind of resistance and consolidation and we push back down? But now that I have the line, that is the reference line, I can maybe determine where to place a box if I want, like a zone. What I can do is I can look right above. I see a body and a body. I see it right here, bodies. So I can kind of anticipate if I'm drawing a zone right there, I could do it like this. And we're trading right into that red zone. I'm going to show you a different approach how you can do this. You can do it like this. Okay? See right there. I just came up to the body and the body off of the point of reference of 50% of that candle. See there how it kind of consolidated in there, close below, drop. We're coming right back in. Okay, that's one way of doing it, if you like. Okay, so now we're going to see if we can break out of here. Okay, so it came up, closed above, it was green. We closed below, pushed down, and then when I know my zones, then I just get my ruler and then I can measure the tape. From down here to come up there, it's basically a $2.50 move, but units, and points and percentage, and you guys trade Forex and all that. So you guys got to know that these are units and they're not just dollars over here, okay? But right now, look at the move we have going on the hourly. We broke through here. There's our resistance up there. So who said 533? Was it, sorry, who said 533? Was it 533? Sergio. Yeah, you said 533. Yeah, you are right. That's our upper resistance up there. Okay, so I can draw another hourly right at those bodies. Okay, so now I've got points of interest on the hour. And if it can kind of maybe come up here, what could happen is we're trading in that red box. It could find resistance and get rejected out of here. And maybe retest this and maybe we drop back down. Okay, it could come all the way back down into here. It could also continue. We got a lot of time, 36 minutes to go. Could break through here and then retest this and it's green. And then all of a sudden we're making our way back up to, Sergio, 533. That's the point of those bodies. Yeah, there was a little breakout up there, but maybe we retest this. Maybe we come up to our upper supply. But this is how now it is trading on the hourly. So I've really kind of condensed it in. I've really consolidated it. We started with the daily. Now we're bringing it down to the hourly. So now we got to focus on this red zone with this green volume coming in. Okay. Similar with this big red candle that came down. See how it's abnormally large compared to all of these other candles? So what I do with this candle too is ignited, open, close. I can figure out where maybe 50% of that red candle is right there. And if it comes back to 529.83, let's just round that up to 530. That might be a good higher low support. So if it gets rejected in this red box or it comes back down and it comes red, 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 maybe our buyers are waiting right there to step in. There's 50% of that red bar. I can see when it came down earlier, it came down, sellers sold it, but then it came back, closed above that white line. Again, 12 p.m. came down and closed above there. So this to me is a good point of reference. I would be looking to take maybe pending buys off this if it comes back down here. I can place an alert and wait for it because maybe it comes back down and bounces, has that move. Okay, so do you see how now I start to really break it down? And now what I can do is add an alert here, okay, at the 530. And you can do this with any security, guys. I've been saying this for over 5 years now. If this chart was gold, if this chart was oil, if this chart was GBP USD, if this chart was NAS 100, if this chart was Nvidia, if this chart was Tesla, it doesn't matter. Okay, we're looking at candlesticks, we're looking at price action, same shit, different day. Here, I right click, I got an alarm. I can place another alarm at this one, 533. That's representing hourly resistance. Add an alarm up there. So I'm preparing myself for the volume if it comes up here. Okay. So maybe I don't want to trade the 1 hours. Maybe now I want to get in on 15-minute trading, 5-minute trading. We can definitely trade any time frame you want. Now these are our 5-minute candles, how they react at these specific areas. Okay. So you can see what they did right here. There's my hourly line. So I can see here at 11:05, they came down there, but then it came right back up. And you see how kind of the volume is kind of concentrated, like on the 5 minutes, like right inside here. Okay, so if I bring, that's 5-minute support. It came down there, back up. It broke, but it closed in there and back up. 1, 2, 3, 4. I got 5 wicks. That's got to be a green little zone on the 5 minutes holding. Do you guys see that zone right there? Right below hourly, white line, hourly support. Look at how the 5 minutes are accumulating here. It comes down, back up, comes down, really broke it down there. But what did they do down there? They must have grabbed some type of liquidity. Right there. Okay, there's liquidity below this green box. Stretch it into the future. Again, it came down, bounced right back off of there. Stretch it into the future. Now you can see where it actually closed and it dropped it, but then it came gobbled right back up. So when I see these type of moves, when I see they grab the liquidity, I could be buying. Put my stop loss below the liquidity grab. I'm in the profit. I'm in the money. I could be looking at liquidity right there. They came, they swept it below. and then it came right back up. So I could have bought this candle right here, this transition at 1250. We're closed above, retest that. Could have been in a buy, and I'm back in the money. Okay, so you see liquidity was grabbed there. Liquidity was grabbed there. What about in the future? Stretch this. There's now going to be maybe liquidity here, here, or here, wherever if they want to come back down. But then we justify what happens when they come down there. Now you see how it traded right into, took out the high, that 5-minute high, tweezer top highs, okay, all the shit we preach and teach. Tweezer top highs, exact highs, $531.08. Not a penny more, not a penny less. Exactly. Okay, so that's kind of a clue that they're not allowing any more higher highs. The seller who's in the market right now said, that's it. No more above this point. They made it clear. They made it visual. They made it equal. There's no new higher high. So that kind of kills the momentum for now. But it traded right into about 50% of this big red box. This doesn't surprise me, this big red heavy candle coming out of here. So that's why I trade like a robot, guys. If I'm buying and it fills the imbalance, that's it. I'm reacting. I don't give a shit what happens, woulda, shoulda, couldas after the fact. If I'm in a trade from 5 right here, 530, and it came up to 531, this point here, this is like a big move. Like if we look on NASDAQ, okay, I know you're seeing the Qs and maybe you don't understand these numbers over here, but if you look at the same move on NASDAQ right now, I can tell you guys in pips. Maybe this language will, you'll understand this, okay? So I can see there's the 5 minutes, very, very similar. There's that green box, the liquidity grab, there's the liquidity, there's the candle, could have purchase right there. So what is it? Around 800, 21,800, and now it traded right into that top resistance, kind of right here. Pip wise, if you're scalping the markets, from 800 coming into there, 845, 850. That's a 50 pip move, 50 pips. That could be like a daily goal for some of you guys. If you're trading a buck a pip, 50 bucks. If you go $2 a pip, 100 bucks. You know, like that's a fantastic move. But you see how they swept the lows multiple times, and if you're just patient and disciplined and just wait, react after. And then when it comes up there, then when it comes to the next zone, make sure you're just managing your trade. Are you going to a break even? Like if you have your stop loss below the low or down there, then when you're in the money, bring your stop loss to break even. Then you have none of your capital at risk. Your own capital. I'm saying when we're trading the stock markets, your capital is not at risk. It's not like a prop firm. This is your real money. This is not where you play Mickey Mouse. This is real shit. So you don't want to lose your real money, guys. You want to be smart about this. I know some of you guys have that thing, oh, I'm just buying a prop firm. It's only 50 bucks. If I lose it, who gives a shit? I'll buy another one. That's not the approach and the mindset you have trading the stock market. The stock market is your own money. You're working hard for your money. So a lot of you guys work hard, 1, 2, 3 jobs to make ends meet, and you're trading the market. So this is your hard-earned money, and you guys understand when I'm telling you guys, money is not easy. You know, we work hard for our money. Whether you're trading or you're a bus driver or you're a janitor or you're working at a factory, it doesn't matter. You guys work hard for your money. So let's continue to trade responsible and mature. When you get into the money, first thing you should be doing is taking your stop loss break even. And then as it goes into maybe a zone, if you're comfortable, you don't need to do what I do and trade and close the entire trade. You don't have to. That's just something what I do. Because then I like to just get done with that trade and then I refocus, I reanalyze, I clean up my chart. I don't really want to be worried about that anymore. I want to look for a new trade. That's just how my mind operates. I can leave runners, but sometimes I'm just scalping 1 minute and I got to go quick. But if you have time, you don't need to do that approach. I'm not saying copy what I do. You do what you need to do. Some of you guys can scale out. You can scale out 50% up there. Take out 50 and that's all about compounding your account, growing your account. Shit, I almost spilled my Gatorade. Is just compounding the account. You can put a trailing stop loss. Like now you see how it's building. Look at the 5 minutes. Look there was structure right here. Look, you can see how visual it is right there. That was a little breakout filled right there, but that's now structure going. Look, and it cuts into that abnormally large candle right there, 50% exactly. There's a new zone we got on the lower time frames. I'm on the 5 minutes, remember. So this is my scalp areas. So if it comes back down, red, 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 maybe I buy off of here. But if I bought down here, maybe I want to secure all of this profit now, and I put a trailing stop just right below this green box. So if it does in fact come down, I'm not allowing it to come all the way back down here to where I entered. So at least this majority of that volume is secured. That's in the bank. It's good. You know, you can always trade much better when you know that you got the money in your pocket. Life is good. And then we just continue. But do you guys understand that, guys? How it directly mimics NASDAQ 100. Okay? So you see how it came down red, got ignited bar coming up green. It's barcoding. Green, green, right in the zone. Same thing with QQQ. It was green, came down deep red, they gapped it up, coming back up. So it's trading right here. Okay? And then we can do options on the Qs. Okay, so that's another thing. Options on the Qs. Like, for example, if it came into this area, 529, we could have bought the strike price if we're kind of following Forex. You know, we're bullish on it. We could be looking, if we got in at 529, we could look at the 530 call, 531 call, 530.50 call, 531, 532. And then as it's going in the money, we're getting deeper in the money. Our option is trading at a premium. So then we can, right now, if you want to get out of it, we can get out of it right now. We can flip it. So remember, options expire every Friday at 4 p.m. So today's Thursday afternoon. If I was looking to scalp the Qs right now, I could be scalping tomorrow's options that expire at 4 p.m. Or I could be looking at next Friday's options. Okay, so but they come with different prices. So we will do that. I'll show you guys the option chain when we get there. But I need to make sure you guys understand this before we even start talking about the option chain. Okay, because this is the basic stuff. This is just basic charting, and that's it. Okay, so I want to get this out of the way, and then we're going to start to get into the more more intermediate advanced stuff. Okay, so we don't need to just outright buy this. Like if I bought 10 shares of this, it's going to cost $5,000 because it's trading at like 531. So 10 units of this would be multiplied by 10 would be 5,000. Okay, so not a lot of people have $5,000 to buy 10 units of Qs, but we can do option chain. There's always options available for everybody. Okay, but do you understand now, guys? Like if you look at my chart, sorry, let me just go to the Qs because we did a full top down on this. Do you see how my chart looks now? It looks pretty ugly, but these are how the 5-minute candles are trading at these larger areas. Okay, you can zoom in and make it look a little bit more presentable, but this is how it's trading. Okay, have we tapped into above here? Not yet. Maybe we're working our way up there, but you see inside the red box, see how we're trading in this red box right now? Look in the past when we were trading the red box. What is this blue marker right here? Blue, 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 blue. See the colors, how they're color coordinated? The last time I'm looking back, did we trade in this red block in this kind of brown, orangey color? I don't know what color this is, beige, I don't know. But this is 4 a.m., so that's 1 hour after London market opens, 4 a.m. This is pre-market trading in New York, really pre-market if you can get in at 4. But this is all pre-New York leading up to our big event, 9:30, right there. So we're trading. The last time we had volume inside here was this blue zone. What is this blue zone? This is market close, 4 p.m. after hours, trading into, going into the futures market right there, 8 p.m. Eastern. Okay. It doesn't show it on this one, but normally after hours will be showing. So what I can do now is I can zoom right in to see where we got 5-minute action over here. See here in the red box, it came down, it came back up. There they stopped it. It came back again. See the wick right there? I can place right now a line right here. Right there. See how it was body, 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 body. It came back up. There's the bodies. Came back down, came back up. So it's acting as resistance for this session. And now we're Look at, we're trading above it. The first time right now. We're going to close in 2 minutes and 45 seconds above that area that we could not break, where we had that massive push down. So now we're basically doing a 100% retracement from this point all the way down, and we're retracing all the way back up to this point. So it's now breaking out. It's impulsively breaking out of this resistance over here, and we're going to see if it will close above, retest it. Are we going to go a little further? If it pulls back, maybe I look to buy at 50% of this big bullish candle right in here, 530.87. Maybe I wait for this pullback right here. But maybe I want to continue to ride this higher high, higher low, new higher high. Maybe if there's a new higher low, I'm looking to buy that pullback. Okay, so I stick with this trend now. But I also have to be aware that over here, there's still heavy selling pressure. So we really have to start to break and close with strong volume, and every pullback has to make higher lows in order to take all of this out to the left of us. Okay, does that help, guys? Do you see how how clean it can be? I can even jump in right now and look at how the 1 minutes are trading. Look at the 1 minutes. They're the same style candlesticks. They got their own characteristics, but they do their own thing too. Here you got the barcoding. Red, green, red, green, red, green, red, and then it started to move its way up. This body candle at 1244, look at the time in sales, 1244. So it accumulated starting at basically 1230. That's a whole 15-minute candle broken down in singles, single 1 minutes. And then look at the closing candle. The confirmation that closed above all of that was at 1244. And then our new 15-minute candle that accumulated for the last 15 minutes, here it comes down and starts to go. And there's your next move, making the higher highs. So if we're still following this 1 minute trend, it's trending. It's respecting the trend line. Right there it started. It pulled back on it, continuing to move higher high. Pulled back on it, continued to move a higher high. What if we pull back on it right in here or just below it? Okay. Do you understand how trend can be your friend as well? Sergio, my lessons are golden. Thank you, bro. I appreciate it, man. I know that if one person is listening and paying attention, I know that I'm doing my job. Okay, I don't care if there's 50 people or 5,000 people on the call. If one of you guys understands what I'm saying here, it's all worthwhile for me. Like, it makes my day. I'm telling you the honest truth. Honest truth. And you guys can look back 5 years I've been saying that. If I was here with just one person, if it's just a one-on-one, I would be here for 3 hours with that one person, because I get enjoyment out of someone learning this like how I learned it, and I'm standing in front of you guys saying that it can change your life. But you got to do it with the right approach. You got to be mature about this. You got to be disciplined about this. You cannot reckless gamble. Those days are over, guys. Those days are over. Believe me, they're over. Dom, I appreciate you too, bro. Thank you, man. Okay, so guys, it is almost 1:42 p.m. What were we gonna do? So I didn't do a side-by-side analysis with NASDAQ. Like, if I did the same top-down on NASDAQ, it would have been pretty much the same exact top-down, same zones on the Qs. So this is what I wanted to show you guys yesterday. I know a lot of you guys love trading NASDAQ. This is a way how you can get exposure in the stock markets. Put it side by side, and you can see exactly how NASDAQ moved. That's how the Qs are moving. You can see the zones. Like right now, we're kind of closing above it and we're retesting it. So see how we closed above it? This red zone, if I was trading NASDAQ right now, I would just change that to a green zone and continue to stretch it out. Continue with this one. I can see structure that was built inside. I got structure in there as well. I can place a line right there. It looks to me like it's 50%, guys. I'm not making this up. Look, I'll grab my Fibonacci. From this zone to that zone, where's 50%? Let's put a line, 0.5 right there. And look, I'm going to remove the Fibonacci, the magic tool, and look at it. I could not have said it better than myself. See where it came right up to that right there? Down. touched that white line, down. Broke through it, closed right at the white line. Opening at the white line, down. Impulse at the close at the white line. Impulse, close at the white line. Cutting through that bigger base candle, retesting it here as support going back up, retesting it as support going back up, retesting it as support going back up. Here you got a red bar close below, so the line is acting as resistance. There was a little bit of a fake out up there, but you can get clues with those tweezer top highs, and then they pushed it back down. Tweezer bottom lows, same shit on the low, same on the high. Look at, we got the opposite happening on the bottom. Then we come right back up. See where it consolidates, even the 5-minute candles, guys. Look at the spin tops, these spin tops where they're closing. They're closing right at this white line. 50% of our zones. Oh my God. Like right there, right there, right there, right there, right there. And then we're starting to move. If it comes down red, 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 alert. Throw it on your charts right now. Right there. Put an alert. 21,818. Alert. If it comes down, same shit might happen. It might come all the way down, consolidate here, build off of this and go back up. It might close below this, retest this and drop. It might come all the way down here, wick off of this and go back up. There's so much possibilities, but this is what you need to be focused on, this area. Don't focus on up here. Don't focus down here. Focus on this. It could be coming down as I'm speaking right now. If I stay here, I'm probably going to stay and trade this with you. Another thing for today's call was I just want to go over the brokers real quick. We did this yesterday because if you're looking for a broker platform, please open up a simulated. Did anyone open up a simulated demo account as of yesterday and today with a stockbroker platform? Anybody? Okay, so what I would be looking at is interactive brokers. Okay, we're not affiliated with any of these. I'm not here to support any of these, but I'm just telling you the common names that are out there. Interactive brokers. It's a publicly traded company, like we saw it had earnings the other day. This is a great way to get started. Great platform. Everything is on it. Open up a demo account, test it out. There's IB, Interactive Brokers. There's Questrade. Over here, and it all depends too where you are. Are you in the USA? Are you in Canada? Are you in like Sweden? Are you in wherever around the world you are? Okay, so there's Questrade. There's Wealth Simple. Check out Wealth Simple. This is really nice if you live in Canada as well. Great low commission fees, and it's regulated. There's Robinhood. A lot of you guys can trade with Robinhood. Robinhood has really taken off during COVID. They had their ups and downs, but they've fixed it. They haven't had any issues since that time where they shut the trading down for multiple days. But since then, I think they've got their act together. They're much better. So check out Robinhood. They are global. Robinhood is global. So you can check out Robinhood. What else we got here? Finally, Webull. Okay, and then I'll gather up some other names over the weekend and then provide you guys with different options. But what I'm saying is, just like you go shopping, shop around, figure out what's best for you. Open up a platform, demo, test out. You might not like their charts. You might not like their indicators. You might not like the way how it's displayed, all of this. So you got to figure out, if you're going to trade with this platform, get comfortable with it. But don't just open it up, deposit $1,000 and just start live trading tomorrow. Because you might make some stupid mistakes and then you lose your money and then you're left scratching your head. And then Uncle Ron is going to say to you, what the hell were you doing? What were you even thinking? I told you 10 times, start off with a demo. You don't need to spend 2 years on it. Just get familiar with it. An hour to navigate around it. If I was to open up Wealth Simple right now, open it up, I'll get started, open up a demo, go to the charts, put in the securities I like trading, put in Microstrategy, set it up, black background, how I like, green, red candles, start to see where's my Fibonacci tool, start to see if it's got a rectangle box to do my supply and demand zones, all of that shit. Okay, can I put alerts on it? Things like that, okay? That's what you practice with demo. Then actually take a trade, see how it is with executions and all of that. So get familiar. Learn market execution orders, learn your limit orders, because we will be doing that in the stock market. We will be using limit orders. We will be waiting. Like right now, if I put a limit order in there, I'm pending, waiting there to get filled. And I'll show you live how it gets filled, how it doesn't, how it misses. Sometimes you might get filled and then you go and draw down. What's plan B? Are we doing dollar cost average in? Are we gonna double up in this green box down here? All of these things, and I love to do this live with you guys and show you exactly, and then you guys can ask questions. Okay, I'm not doing it to I'm doing it for education. Okay, so we're not financial advisors here, but everyone, let's take a break right now. Let's make some lunch. This has been an awesome week, guys. It's something different. I haven't done this in it's been 5 years since we've done stock trading with you guys at SST. We started like this. It was a very, very small community of like 10 people and less, and we really helped them out, and still to this day they are on their own, they're trading, they're successful, and they're doing fantastic. So hopefully we can do this with more than 10 people. We can get maybe add a zero. That's what I like to do in trading, add a zero. Maybe we can help 100 people. Maybe in a couple of years 1,000 people can understand this. Hopefully, guys, my dream is to teach 10,000 people to do this. You know, like, what do we have to lose? Nothing. It's financial education. Just takes a couple hours out of the day to show this stuff. I'm excited to do this stuff. I love live environments. Nothing is better than live environments. But I'm also a big proponent about PowerPoint presentations, about the theory. Once we understand all the theory, then we can bring into the practical environments and come into the live environments. So I have a shit ton of webinars coming, guys. You guys don't even know how much is coming. Like my notes, my phone is going to explode with how much I've written down of what we got to do. But it's a lot, guys. So I just wanted this kind of week to get your feet wet, to show you guys what's in the markets, stock markets. But education is coming, a lot of it, guys. Right over here, okay. So I want to give like kind of my top pick for if you guys are going to study over the weekend. Pick any one of these boxes, anyone in the Zoom. Are you a beginner? Do you feel like you're at maybe at an advanced stage in your trading, or do you feel like that's it? Like you got this shit. You understand bullish and bearish candlesticks. You understand your support and resistance. You can identify your supply and demand. You know your patterns. Are you guys more in this zone right here? If you are, okay, most of you guys should be in here. This is, look at all these webinars, okay? So wick analysis scalping. We did this webinar, like coming into a green box and a wicks out of there. That's what I'm looking for. A wick out of those zones, a wick right at 50% level. So I'm going to just pick one of these, and I think it will help you guys with what we've done this week so far. And it's a good one to review for the weekend. Let me see here. There's so many to choose from. Which ones would you recommend? I'm going to try and pick a good one over here. And these are like 2-3 hours long, most of them. I'm trying to see here. Something to do with like what we just discussed this week. Trying to find it. Which ones do you guys have? Do you guys have anything here? This is where I would start it off. Okay, importance of a trading plan and a journal. Okay, I know, like with all of these things, we're talking about trading and drawdown. We're talking about psychology of overtrading. We're talking about session highs and lows. We're talking about scalping. We're talking about common mistakes. We're talking about this, that, risk management. But this is where I think you start your foundation, is by having an important of a trading plan and a journal. I'm telling you the honest to God truth on this. Some people laugh when I say this and say, Ron, who takes this serious these days? Trading plan and journal. I'm telling you, this will tell you everything you need to know about yourself in the trading world. That's a good one. Make sure you have a trading plan. If you ask me, I'm telling you, I do the same shit every single day of my life. I get up, I do a top-down analysis, I look at the security that's trending. I'm comfortable. Like this week, I've only been trading MicroStrategy, and every single day this week, I've hit my daily goal on it with minimal effort, trading for less than 20 minutes a day, because I'm doing the same shit over and over and over, where it's becoming very repetitive. I can do it with one eye open at this point. Like that's where I want to get you guys at. But the reason why I'm doing that is because I have a trading plan every single day. I do not deviate away from it. I know if I'm missing something, like if I start trading right now and I never looked at the earnings reports, I wouldn't trade. I know that I'm missing something. There's no way I can go trade the markets right now, and I don't know who reported pre-market or who is coming in after hours. I might make a reckless move. What happens if I'm trading NASDAQ? I jump in the markets right now because I see some nice volume, but I forget that Netflix is reporting after hours. And it could be just the way how it's trading in that afternoon leading into Netflix earnings, not knowing, I could make some big mistakes. So it's preparing yourself, guys. This is where it all starts. You want to start with, if you want a fresh start, everyone says, if I could start all over again, how would I do it? This is where you're building your foundation. I'm in my basement in my house right now. Underneath me is a cement floor. I know I got some fancy flooring on top of it, but it's cement below here. It's the foundation of this entire house. This is what holds the house together, basically. So what holds you together as a trader? When you look back, what are your roots? What is your foundation? Like where can you always fall back? And that's where you understand the concepts of trading. It starts with a plan. When you open your eyes every single day, when you get into the markets, you should know exactly what you're doing. Just put some music on, just relax. Look at your news, look at your earnings, look at the Yahoo Finance, look at your overall day-to-day news. Look what red folders there is that you're trading. What security are you trading today? Did you do your thorough top-down analysis? Did you figure out your higher time frame areas of supply and demand? Did you figure out your points of interest on a particular time frame you're trading? What is your trading plan going in? Take your first trade of the day. Is it a feeler trade or are you going all in? Are you allocating a certain amount of your capital to do position trading this day? What is your daily goal? When you hit your daily goal, are you walking away from the markets or are you continuing to trade? Are you getting better at being patient and disciplined and allowing the trade to come to you? And if it misses you and it goes away, you're okay with that because you know that there's going to be another opportunity. You just got to be patient for it. That's the name of the game, guys. If you want to wait to get paid, that's what it is. It's not about buying and selling. Trading is all just a waiting game. I know everyone on this call can hit the buy and sell button, no problem with at ease, but it's waiting. That's what is the most difficult part. That's what took me years to learn, was just waiting for this red volume to come to me here or to here. I was always this guy buying that candle. I was this guy buying right up there. And then all of a sudden, I'm in drawdown and getting closed out, getting pissed off, adding another trade, and then the market is just playing into my psychology. And that's what it does. It plays mind games with you. If you know how to eliminate the mind games and just trade on a plan every single day, a very disciplined plan, you don't need to play the mind games with the markets. You can be above the markets. It's a game of chess. The market makes a move. We have to prepare for the next move. That's what reading the price action and anticipating the move where it can happen. We're playing the game with them, okay? We're not going to make millions and billions, but we can make a couple crumbs and we can eat good. So you see how it kind of faked out up there? What was up there? There's liquidity up there. We just did an entire analysis of this. Above there, it came up. That's where we had a red box. We brought it, but we just made it. But there's money above this box. There's liquidity above this box. If we stretch this into the future, there's liquidity above here. Okay, so it looks to me like they swept the highs, took out the liquidity, came back, closed it below here. So this green box is not in fact green anymore. It's red now. So we'll see if the sellers can continue to maybe push it down, but you got to follow the wicks. It's making a higher low, might come back up, trade in here. That's, to me, it's considered like one top up there. So if it came up there one time, coming back down, what happens if it comes up again? That might be the second top. Then the market might break and come back down. Okay, and then it will come down into a green box. Lisa, sorry. What's the question? Sorry if I missed it, but do you back off the day or week before earnings? No, no. Like Netflix, I'm not going to say we predicted it that it would be a bullish move, but Lisa, when we go rewind, okay, remember earnings are every quarter for any corporation, whoever is reporting. Let's say Nike is reporting this afternoon. Okay, I'm just using as an example Nike. Some of you guys are familiar with Nike clothing retailer. If Nike is reporting, what I do is I rewind the last 3 months. We're in January right now. So obviously if I rewind 3 months, it's December. What is December known for? Christmas, holidays, spending, buying presents, all that shit, buying clothes. So December, November, October, rewinding it back. Did Nike have any big news those last? Because that's what is going to be reported on. So did Nike do anything that we should look for? So then that's what I do. And if everything looks good, maybe I look for call options going into earnings. Because if they hit, they make astronomical percentage gains. Like if you had Netflix calls on that earnings, oh my goodness, I can't even tell you how much your percentage gains would have been. But if you're on the wrong end, you could lose that option. But with Netflix, it was kind of, I'm not going to say easy to anticipate, but I watch football. I watch football religiously. Like we got big games this weekend. NFL, first time ever, did live coverage on Netflix. The 2 Christmas Day games. Normally they're on NBC, ABC, but Netflix got the live rights to have those, to host those games. So that was huge. Do you know how much subscribers Netflix got just for hosting those 2 football games? Because those were not available on any other television channel. Like you couldn't, and hardcore football fans, they want to watch those games, they had to subscribe for Netflix to get those. Also that Mike Tyson Jake Paul fight, whatever is that his name, that was huge. Okay, I was loving that. Like I wanted to see Mike Tyson demolish this guy. It was shit. It was a horrible event, but it was only held on Netflix. And Netflix also has, we were talking about it, World Wrestling Entertainment, WWE now. They've got a lot of new series. I was blown away by 21 million subscribers. I'm like, I didn't know that they would get that many, but that analysis probably beat all analysts, and that's why it drove like right through there. So if you kind of led into that kind of research, then yeah, if you want to trade options, it is. Some people say trading options in earnings is gambling. Anything in life is gambling, but if you do it with proper analysis, proper research, and I put, let's say I put $100, and if I lose that $100, I'm okay with it. That's not gambling. I did my research, I did my analysis, I did my risk management, and I want to test my theory. So I want to test the earnings with a call option. If everything is shitty, let's say the last 3 months Netflix we see it's been, subscribers are canceling, something happened with Netflix, I wouldn't want to look for a call option. I would want to look to short that company. So what I would do is I look at the strike prices for puts. If I think that I'm anticipating bad news about the company, something happened 3 months ago, they're reporting on it now. So then I would look to short the company. Again, I'm not going all in. I'm not gambling. This is not Las Vegas. But I might look for a call option that's affordable. And I know right away what my maximum risk is on that option, but I also know that I can close it out at any time. I don't need to wait for it to expire worthless. So if I was buying that contract, I did my research, I did my analysis, I bought it, but I'm willing to accept that loss if it doesn't go right, and that's it. that's not gambling. A lot of traders and investors make a shit ton of money when it comes to earnings because they follow this. Like big names, Tesla, Apple, Nvidia. Like investors are waiting for earnings calls. And us as scalpers or intraday traders, if we're following this and we know what's going on and you understand your security, earnings is great to trade. We'll do live earnings together. Like that's why I'm so excited about the stock market, because the shit we can do in here is endless, guys. It's not just always about forex and gold. There's so much here that I can't even explain how much there is. But Lisa, yeah, earnings is a great opportunity, but you have to be very careful. Just like the way how I stated it. Make sure you do your research. Make sure you do your analysis. Make sure you do your top down. Make sure you understand, rewind the last 3 months of the company. Like you can just write in there Netflix news, and articles will come up. What's been going on, and then start to build. Like brainstorm and start to build a hypothesis. What are you doing? Do you think it's good news? Do you think it's shitty news? All of this stuff leading into that event. And then the last thing is trade management, risk management. How much are you willing to put? You're not going to put, if I have $1,000, I'm not going all in on $1,000 and just betting that Netflix is going to go up, because if I'm wrong, I lose a majority of that. Maybe out of that $1,000, I might put in $20 and just test out my theory, and go from there, guys. That's how it all starts. But I will show you guys everything, and you pick what you want to do. I'll show you guys Wall Street market open trading, I'll show you guys post Wall Street, show you guys power hour trading, show you guys after hours trading, show you guys pre-market trading, show you guys trading into earnings. We'll showcase everything, guys, and you guys just ask questions and we go from there. But I need to get out of here. Wayne, what's going on? Got a soccer game now? Go enjoy it. Yeah, enjoy it. But I'm done for today, guys. I will see you guys tomorrow morning. We'll go 11 a.m. Eastern. We got Forex Borex doing a pre New York session in Zoom, guys. So shout outs to Borex. He's killing the markets as well. So he'll be doing pre New York with you guys. I'll come in and I'll do post New York, and then hopefully Friday has been a good learning week for you guys in the stock markets, and we're just going to continue. We haven't even started with options yet, but we're building our way there. I want you guys to know what you can do with just buying straight equity shares of the company, and then we're going to get into options. Okay, thank you guys. God bless everyone. Have a great day. I hope someone learned something new from today's session. And look at this red candle dipping all the way down. I'm probably going to get an alert right here if it comes and taps in here. But boom, thank you. I appreciate you guys. Don't forget Lifetimers Sunday. We have also our session at 10 a.m. Eastern on Sunday. I look forward to those calls with you guys. And maybe Sunday nights, we're going to do some long forecasts on the stock markets, and we can follow those securities week over week and look for investment opportunities, look for swing trade opportunities together as a team. So it's just getting better and better and better. The sky's the limits for Stock Sniper Trading. Guys, if you want to join the team and be part of this, we'd love to have you here. Love to have you. You guys get the Discord going. The more, the merrier. Please join us if you guys want to take your trading to the next level. We're here to educate and teach. We do everything here. Trade ideas, signals, education, live trading. Fantastic team of moderators, admins, amazing members like family. Brothers and sisters here. But it's a great atmosphere, guys. Just let's continue. We got big things coming for 2025. It's just the start. Okay, guys? And just continue working on your skills. Continue improving your game. And see how I just got an alert? So my alert just went off. Just got triggered because it tapped in that line. Does that mean just right now I go in blind with a buy and just hope for the best? No. This candle, now I look at it. It's got 3 minutes and 45 seconds. Just opened up. I can go into the 1 minute and see exactly what's going on. It closed right there. Could be building something off of this. But yeah, you see how I just got alerted? So if I was making lunch and I walked away. I just got an alert. I would run back from making my lunch and just take a look at what's going on here, because that's what an alert is there for. It's alerting you that it's at a specific area. But it just doesn't mean that we go in blind and take a buy. We got to see what happens. Did it take out the liquidity? Is it coming back up? Is it going to consolidate? Is it forming a bottom? Is it going to reverse? All of these things. But this is where it starts. It starts here. It might start here. Any one of these zones, okay? And then don't trade all the shit in between. Wait for your specific zones of reference, okay? And you see the same thing with the Qs. We tapped into that area, and now we're coming down. Same thing with NASDAQ. Mirror image. If you do MicroStrategy with Bitcoin, mirror image, okay? So split charting correlations, it's good to do in the markets, okay? Some of you guys do it with US dollar DXY with gold. Some of you guys do it with DXY with the British pound. So we can do the same shit here. I can show you exactly how it looks on NASDAQ, something you guys are familiar with, and then show you the Qs. Same shit. If we do MicroStrategy alongside Bitcoin. That's sometimes when I'm scalping MicroStrategy, I'm also looking at the Bitcoin chart, and I'm just following what Bitcoin is doing. And then I look for divergence. I spotted some divergence today. I'll talk about that on another call, okay? But thanks, guys. Appreciate all of you guys. Enjoy the rest of your day. I got to go pick up some kids from school, and I'll see you guys later. Have a good day, everyone. Thank you, guys. God bless. Leave us comment if anything you want me to do on the next session. Really do. I read the comments, guys. I read the comments, Zoom and YouTube, and I look forward to some comments, what I can do for you guys. I'm here for you guys. Otherwise, what's the point of being here? I'm here for you guys, okay? But have a good day, everyone. Thank you guys for joining. Enjoy the rest of your day.
Recording stopped.
Hey guys, good morning. Welcome to the live session of Stocks Network Trading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.